It's worthwhile. We're on the ground now trying to partner with indigenous Ugandan businesses to see how we can expand markets for each other.
So I'm praying that all of you who have been here, what we have discussed and what we shall recommend, we should take action.
We are incubating over 210 fintech companies, and they are ready for investment.
Those of you who have got the capital, come and we show you where you can invest.
I want to also thank the government of Uganda for really putting in place an investment-friendly environment. And I think that's why we have almost everyone coming from all over the world.
STI, our commitment is branded all over, making Uganda the best.
We have termed this Science Week to Simul Day, meaning we have taken off. We have 267 exhibitors in here. All the exhibitors you see here are ready for investment to go to market.
We decided to work with the ministry, the SDI, and the secretariat to see how we can bring those investors here and do the investments here in Uganda for Uganda. Round of applause for Uganda.
I welcome the investors. I thank our scientists. There's nothing that cannot be done. You highlight the areas of study which are very much in need. This 500 billion that we are talking about, this is not a lot of money we have put it. Can be provided through this annual allocation.
Have 7 eminent scientists and innovators that would like to recognize.
I think the best part about that is the number, 500 billion. Now what that means in US dollars is about $150 million committed verbally by the president on video for science and technology. So we're able to go and actually collect on this. A round of applause for that, please. Welcome to Uganda, welcome to National Science Week, welcome to the Investor Summit at National Science Week. Honorable Minister, distinguished guests, this is the start of our 2023 Investor Summit, and we're very glad that you could make the time to join us and be with us during this session. My name is David Gonahasa. I will be your host today, and I'm a founder. I run a company called Tripesa and also work with the minister. But what's interesting about Tripesa is it's exciting to see my investors in the room and in Uganda, or some of you that I've pitched to, like Toby over there. When I first saw him, he was in office in Lekki. Well, now I can actually pitch and probably get you to write a check. You're in my country. I want to start with a story. My father told me a story many years ago about how hard it was for him to go to school. He said every morning at 5 a.m., he had to walk 7 kilometers in one direction to fetch water to go and bathe. What happened is, when he, on his way back from the 7-kilometer trek, he had to climb a mountain, kill 2 lions, and ride an elephant before he was able to go another 12 kilometers to school. And I believed this. And I thought for a fact, oh gosh, it is very hard to study. Now this is the sad truth of Ugandan entrepreneurs. Trying to raise capital as a Ugandan venture builder or a startup company is extremely difficult. I have stories of my own from jumping on boat rides from Badagry to Lagos to have a meeting with an investor. Luckily, I raised money, but many have not. How do we fix this? This is why we're here today. But before we start, I'd like to invite the Honorable Minister of Science, Technology and Innovation, also our host, to make a few remarks and share with you why you're here and what she expects to achieve. Honorable Minister, please.
Good morning. I think some people are still you are in Uganda. So the time zone is Uganda, East Africa Standard Time. So catch up with us. Good morning and you're welcome. Thank you for traveling from wherever you have traveled to come here to be with us for this summit. And we are so glad that you accepted the invitation to come and see for yourselves what Uganda is, what Uganda has, and we plan together where we can take this beautiful piece of real estate called the Pearl of Africa. Before I even talk about investment, Uganda is so unique and beautiful. So when you're here, some of you came, you want to go back tonight, then plan next time to come and spend some time with Uganda, if only with the people. You haven't seen the people yet. So this morning and the whole of today, we have dedicated it to discussion on investment. This week, I've been privileged to have Kumi as my assistant. He's been there too. And he kept saying that they have been investing in Ugandans, but these Ugandans, they invest them in Nigeria, they invest with them in Kenya, they invest with them outside Uganda. So we would like you to get the amazing environment that we are creating. Just to give you a little bit of background, the unit called Science, Technology and Innovation Secretariat was created by the President himself. He has championed it, and it was created in 2021. We held our first Science Week in 2021. And at that time, we were trying to understand what is in the ecosystem, what's going on. And then the second Science Week, which all Science Week happens around the same time. Actually, today is the World Science Day. So we usually close it on the World Science Day, but because now we want to have enough time for the investors, we added another day. So in the second one, we were casting vision. Where are we going? The theme was Vision 2040, the Uganda we want through science, technology, and innovation. And it was an amazing week. It was futuristic. It was being in Uganda in 2040. So now that we know where we are starting from in 2021, and we know where we're going in 2022, this year we have started on the journey. So you see the branding all over called Tusimbude. Let me have some of our foreign guests say that word. Can I hear? Tusimbude. Tusimbude. It means we have taken off. And actually that's why we say Uganda Tusimbude. We have taken off. We have engaged the GIA for an upward thrust, and we are at it very, very actively. And I know that many of you will have time, or you have already had time to engage with a number of our exhibitors. Our speed is really fast. Many of the things you see have been done in the past 2 years. So that's a good speed. We are dressed for the journey. I bet you don't usually meet a minister in t-shirts and because in t-shirts and corporate wear all the time, because we are on the journey. We are on the journey. And our commitment is we want to make Uganda the best investment destination in the region. We are listening, and my biggest job today is to listen. Is to listen and capture. And by next Investors Summit, I'll give an account of how we have implemented what we discussed, the resolutions we made, what we agreed upon. We may not start perfect, but we are aiming for what is going to work best. I was talking to one person as I was walking in, says, I'm investing, but I had to go and build outside Uganda. Now, I think you will not find a destination with 10 years of tax exemption. That's our beginning. We got that commitment yesterday. 10 years of tax exemption for innovations. And more is yet to come. So I'm looking forward to today's discussion. I'll be here most of the time, learning and listening from you and engaging with you. If you have any issues which haven't been raised, I have an office just outside this hall. This entire week, usually I shift my office to engage with the innovators and investors and guests. So I want to wish us a very, very successful summit. I'll be back at the end of the summit, but I'll also engage during the session, but I'll be back at the end of the meeting today. Once again, you're so welcome to Uganda. And I want to appreciate David. David, I want to appreciate Melissa. Is she here? Melissa, are you here? Melissa is David's mentee. So she's an amazing young lady coming up. So thank you. Let's discuss, let's enjoy, let's engage. We have created a beautiful matchmaking and dating space over there in Investors Lounge. So have some discussions. Thank you, and God bless you. Making Uganda the best.
It's very interesting. Having worked with the Honorable Minister for the last 1 year, what's most interesting about her is this, when she speaks, it sounds very calm. But in there's a lot of orders that you have to take. And I'll tell you an example of one order that I had. So we're at GITEX in Marrakesh, and she walks around GITEX and says, do we have something like this in Uganda? And we're like, well, not really, but we're close. And she's like, make it happen. And what we did as we built Science Week this year, to be honest, is yes, we try to take from the idea of how do you showcase an ecosystem in one space, and how do you allow people to interact. And the one thing that we'd like to ask you to do as you're around is take time out to visit the different spaces, meet some of the innovators. There's some in the rooms as you go away for the breaks. There will be some in the Investor Lounge. But to a huge extent, it is very important that yes, you have networked, yes, you felt the ecosystem, but also meet the entrepreneurs, because we're going to have a deals table here in a few minutes, and we hope that we'll be seeing a few things being signed. Why we're here is especially to learn from you. And one of the biggest questions is, why are you not investing in Uganda? Are we too far away from you? Are we not good enough? Are we, we need to know why. Because if we know why, then maybe we can fix it. Our first panel this morning is going to be moderated by Mr. Shagun Cole from Masai Ventures, and the topic is, why aren't investors investing in Uganda, and how do we make Uganda more attractive as a startup destination? The other panelists will include Mr. Toby Oke from V8 Capital, Mr. Ryosuke Yamawaki, I got it right, Mr. Eric Osiokwan, Nella Duke, and this is a hard one to pronounce, Mr. Uwemakpan. Thank you very much.
Good day, good morning. Honorable Minister, good morning. Are we alive this morning? I can hear you. Please, I'm a Nigerian, so no farming and packaging is allowed. Yes. You can clap. All right. This is a very important panel, and I'm very excited. We have the who's and who's in the house. Okay, just before I introduce them, just before we start, I think it's very strategic what the kinds of conversations that we've been having all through since we started. It's very imperative to say that, and we're very excited, and we know that a lot of investments are going to be happening in Uganda. So please, a round of applause for Uganda once more. So because I'm very committed to closing the $42 billion female funding gap, I'm going to start by introducing Nella. Nella Duke Ekpeyong is a partner at Ingressive Capital. Hello, Nella. We also have Ryosuke Yamawaki, partner at Verod Capital, Africa Ventures. Then we have Uwem, my very good friend. We're up awake until 3 a.m. because of the panel. You understand? Uwem is the head of investment, Launch Africa Ventures. Then we have Eric, my Ghanaian brother, managing partner, Shanzo Capital. A round of applause for them once more. So before we go into this panel, I'm just going to allow them to introduce themselves, starting from Ryosuke, and then it goes to Toby, Nella, Eric, and Uwem. Tell us about your fund.
Very nice to see everyone, and I'm very happy to be on the panel. I go by Rio because my name is extremely difficult to pronounce even for myself. So just call me Rio. I'm a partner at a fund called Verod Capital Africa Ventures. It's a Series A focused fund. We invest 1 million, 2 million size of ticket investment into companies that are typically Series A stage. We started with an earlier stage investment called Keppel. We made about 100 investments across 11 African countries, including Uganda. We have one investment in Uganda. And we started this new fund, Series A focused fund this year, last year, February, sorry. And yeah, I'm extremely happy to be here and discuss the topic. Thank you.
Awesome. Thank you, Rio. Toby?
Hi. Okay. I'm Toby Oke, V8 Capital Partners. We invest primarily in Series A. We do have a very small early stage fund as well. Have about $50 million AUM, and just closing Series A, $50 million fund for Series A. Invested, because it's a much bigger companies, we've done about 15 companies. I've invested in a Kenyan company with presence in Uganda. So we talking to our portfolio, the MD in Uganda today. Glad to be here. Nice to my first time in Kampala. I think I was in Kampala when I was 5 years old, but this is the first time as an adult, and very impressive.
Awesome. Nella.
Hello.
Hi.
Thank you. So my name is Nella Duke Ekpeyong once more, and I am a partner at Ingressive Capital. And Ingressive Capital, we have a 10 million Fund 1 and a $50 million Fund 2. We've invested in about 46 companies so far, and we invest at the pre-seed and seed stage. We're present in 5 geographies on the continent, and this is also my first time in Uganda, and I can say I'm incredibly impressed. So, thank you.
Awesome. Eric?
Thank you. My name is Eric Osiakwan, and I'm partner at Chanzo Capital. At Chanzo, we focus on the digital economy. We're doing 2 strategies. So we have what we call startup strategy and scale-up strategy, so pre-Series A and post-Series A. The startup, we've done 2 funds. First fund, we did 16 companies. Second fund, we've done 14 now. And then we're raising a scale-up fund that will do Series A and on. This is my second rodeo in Uganda. In 2004, I was here, I helped build an ISP called One2Net. I don't know if Badri's in the room. And we built an IXP here, so I know a few spots around Kampala, but it looks different now. So I'm happy to come back and do some investing. So we've done 2 investments. We're in Trepesa, David's company, and then we're also in Kara, and hope to do some more.
Akwaba. All right, Owen, over to you.
Good morning, everyone. It's still morning. Morning. My name is Uwem. I lead investments at Launch Africa VC. We are an early stage fund, and we invest between pre-seed and pre-Series A companies. From our fund one, which is around $33 million in AUM, we've invested in over 130 companies across the continent of Africa, showing that we're very Pan-African in our approach. And from our fund 2, we already invested in an Ugandan startup. I met the founder yesterday, and we're hoping to increase the size of our portfolio with more Ugandan founders at the end of this Science Week. Thank you.
A round of applause for them. So, jumping right into it, and it's a very, very sensitive topic. Why aren't investors investing in Uganda? Making Uganda a more attractive landscape for startup investments. And Toby, yeah, I knew you were going to be surprised. So Toby, I'm starting with you. And my first question, what do you think are the special factors or challenges that have contributed to Uganda being a lower priority as an investment destination compared to other countries, African countries?
So, okay. I think the first thing to say is it's actually not about, Uganda isn't being funded not because it's Uganda. It's
awesome.
It's just to do with the metrics. It takes a lot of energy, a lot of time for you to put money in anywhere. And our bosses, the people we work for, are looking for us to A, deploy capital, and B, get good returns. And for you to deploy capital, you have to be in a big enough market for capital to put the capital to work. So there's no point investing, if you have a $10 million fund, for example, there's no point investing $10,000. I'm just using as an example, when you can invest 100 or 500,000. Because if you do 10,000, you're going to have to do 100 companies, right? Mm-hmm. And each $10,000 check is the same amount of work. So in a nutshell, what I'm saying is Uganda is a 45 million people economy, and simply because of the size, people would prioritize, or investors would prioritize, bigger markets. And I think what Uganda can do is to ensure that its startups or its technology companies have very strong access to the EAC. And being part of the EAC, that changes the game from 45 million to 300 million. And at 300 million, you're a big brother to Nigeria. So all of a sudden, you're very investable. And I understand that, not every industry or area can actually transcend Uganda to Kenya to Tanzania to Rwanda, etc. But if you focus on creating a bigger market, a lot more capital will come in. So I think it's more the metrics, and it's also perception. People need to understand where the opportunities are. I mean, we've looked at a business that was doing exports from Uganda, and they were great margin business, and they were helping exporters in Uganda with freight services, etc. And we've invested in a similar business, I think, in Ghana. And I just didn't know that much about Uganda. Like, what's the biggest export? You know, how big is the flour market, or how big are the commodities, etc. So the more investors know about the drivers of the economy, the more confident investors would be that if they put money here, it would actually multiply and go to work. So the two things I would say is the size of the market and the knowledge of the investor as to what Uganda can actually export.
Amazing, amazing. OM, Toby said people have to be aware of the challenges, right? Launch Africa has been heavily invested on the African continent. Like, how many deals?
From Fund 1, 133. From Fund 2,
133.
From Fund 2, we're going to be 7 by the end of the week.
Awesome.
Yeah.
So you've spent some time in Uganda, right? Can you share any observations, right, of unique challenges or opportunities in the Uganda's tech ecosystem that could influence the investment strategy of a Pan-African fund like Launch Africa?
I think the first one is, like Toby said, it's about the narrative around Uganda, right? There is this perception that the market is too small to, pour in capital, because at the end of the day, every investor is optimizing for returns. We're not just giving out free money. We want to make money for people that employ us, our LPs. And as such, when you check online for, how big is the startup ecosystem in Uganda, barely nothing comes up that you can use to, back data or, defend your investment decision. So maybe a more deliberate attempt at crafting a narrative that shows that Uganda is not just a thriving economy, it's open for business and open for investment. And that's very, very important. How many local tech media firms exist outside the traditional media firms? Because you find that tech media firms tend to tell the story better than what a traditional newspaper will tell. So how many people are telling that story? How many of our founders actually know how to tell their stories, right? You speak to founders and you say, oh, tell me what you're building. And again, I think it's also a function of how much training they get, but they can't necessarily tell that story in a way, say a Nigerian will say it or a South African will say it. That confidence is not there. You speak to a Nigerian and he's telling you, I'm building this for Africa. And you speak to, an Ugandan and he's saying, you see, my business is going to be built in Kampala. So already from first interaction, there's that narrative that this is not big enough for what I want to invest. So understanding that narrative drive investment decision, very important. Sometimes, yes, we want to believe that it's driven by fundamentals, but I tell you the truth, a lot of it is built by FOMO. And FOMO is led by narrative, by the stories you can tell. So if Uganda and Ugandan ecosystem can tell better stories about the ecosystem, tell better stories about the successes, then you would definitely see more investment coming to the country. I'll stop there because there's a lot to say.
There's a lot to say. Better stories, right? So Rio, speaking of FOMO and telling the narrative, right? Vered Capital has been involved in investments across multiple African countries, right? So from your perspective, when evaluating potential investment decisions, right, what criteria do you typically look at, and how do you think Uganda fares in comparison to such investment criteria?
So obviously there are many meticulous metrics or criteria that we use, but I think what's most important is the exit scenario. Again, we need to make money, we need to make returns, and the exit scenario, how much the company would be valued at the end of the investment period, oftentimes the end of the startup journey, is quite important. And then exit scenario is significantly affected by the scalability of the business. And when it comes to scalability, any business model, even if you call it a digital business, digitally scalable business, it's deeply affected by the underlying economics or underlying size of the industry that they are in. Even if it's agri-tech or digital agri, its limit is within the size of the agriculture industry itself. Or even if it's insurtech business, it's obviously limited by the size of the insurance industry itself. So in that sense, maybe it's also related to Toby's comment at the beginning. You know, it's a function of maybe just the economic size itself. You know, if the overall economy is not the biggest or as sizable as other economic major houses like South Africa or Egypt, already you have a little bit of a disadvantage in that sense. Maybe to put it in perspective, for example, insurance industry or insurtech itself was a little bit of a buzzword. Over the last 2-3 years, there are so many insurtech or insurance API businesses coming from many different countries. But if you look at the size of the insurance industry itself, even in Kenya, I'm based in Kenya, which is bigger than Uganda, but the industry size itself is 2 billion. The gross written premium, which is a top line revenue for the whole industry, is 2 billion. And how can you scrape a big revenue? And then when it comes to a big revenue, for a startup to be acquired at a decent valuation, in my view, you'd hit maybe 10 million, 20 million US dollar revenue within a time frame of maybe 5 years with profitability. And for you to grab maybe 20 million revenue in an industry of, for example, 2 billion, which is an insurance industry in Kenya, it's extremely hard. The biggest insurance company in Kenya, for example, it's called Britam, and their revenue in US dollars is only 200 million. So it's like you are going to become 10% of the size of the biggest insurance company ever in Kenya. And then if you try to do the same thing in a digital approach in Uganda, which has a smaller economy, I think it's challenging. So I think a country like Uganda with its economy not being the biggest on the continent, I think you need a slightly different approach. Maybe you use this country as a maybe launchpad to scale across Africa. I feel this is the strategy that Rwanda has been taking. If you can, or anything else, maybe if you can open up the infrastructure industries to startups to get a bigger market share in the country, then it might be the case too. But anyway, you really need to find a way to showcase the fundamental and ultimate market size that startups can take. If the market is small, then the revenue of the startup is small and the exit is small. That's my perspective.
Awesome. So Eric, right? We hear things like valuations, how big is the market, right? And these are things like investment criteria, theses, and all of that. You've been doing this for years, right? So tell me, how do you think Uganda as a country, Uganda's tech ecosystem, right, can leverage her diversity and unique strengths, right, to position the country as an attractive market for early stage VC investment?
All right, thank you. That's a good question. So I'll build it up from some of what my colleagues have said. So the factors that my colleagues have enumerated are mostly macro factors, right? But if you take tech and VC, somehow uncorrelated. So we try to look at the micro factors, and we use the micro factors to look at the macro. So it's almost like an inverse way of looking at the market. So to your question, we look for two things. Is there a sector that a country is known for? Uganda is known for tourism. And I'll use Tripesa as an example, why we invested in Tripesa. So most people come to Uganda for tourism, right? So we asked ourselves, that's a big enough macro factor. Now the micro is, can you find an entrepreneur who is able to build something that is unique, that fits within that macro, right? So actually, before we invested in Tripressa, we actually invested in another founder who tried to do this before, and he failed. So it was the second rodeo before we got it right. And the reason we invested in Tripressa was, even though the first attempt failed, and we put in $5,000, it wasn't a lot of money. But we wanted to put our feet in the water and test that water. And what we realized from that first founder was that he was able to clearly show us that there was an addressable market. The reason he failed was that he was a bit ahead of his time, and he was too focused on the technology and didn't get product market fit. So when David then talked to me about what he was trying to do, he had already gotten initial customers even without having a minimum viable product. So immediately I realized that he's been able to do what the previous founder had not been able to do, which speaks to the key thing that we look for in founders, which is execution risk. So most founders will paint you a big picture. I'll take you to Mars. I'll take you to, which is great. But then as investors, the risk you really take is execution. Can he translate that vision into reality, right? And we all mark execution in different ways. So for us, when we are doing due diligence on founders, we are trying to figure out whether they can execute on that idea that they are selling us. Can they move us from that realm of unreality into a reality that we can touch? And we found that with David, and then we invested. So it was an easy decision for us to make. Because David, and I'm not, I think David is a great founder. One of the things of his background was he had worked also in a multinational and led operations in 5 countries. So it was clear to us that this was going to start in Uganda, but he can go Pan-African because he's got experience. So sometimes having the experience is important. The third is that he's a second-time founder, which is something that we started looking for in our Fund 2. In Fund 1, we only did mostly first-time founders. And first-time founders are great, don't get me wrong, and they present a different set of challenges. But with certain experiences, with certain industry, you need somebody who has a bit more industry experience. His previous startup, he was addressing a problem from his previous startup. And so he had an experience that was industry specific, and that was the third reason we invested. Right? So I'm giving this example to kind of just bring it down to reality that sometimes it looks difficult, but you got to look deeper, right? And as you look deeper and you roll up your sleeve, which is what we like to do, you begin to find the gems in the mud.
Awesome. Thank you so much for that masterclass. All right. And you see, Nella, you have done tremendous work, and you're doing in helping founders overcome obstacles, right, when seeking early stage investment. And just like Eric said, gems in the mud, right? And speaking about Africa, we have a lot of gems. Can I hear an amen? Thank you. So, Nella, same question, just a twist. How can Uganda create a more favorable environment for startups to thrive and tech to blossom?
Thank you for that question. And before I dive into how Uganda can create a more, encouraging environment, something I discovered on my trip. So we had a mixer last night. I spoke to a lot of founders. It was very insightful, but there's something that seems to be missing, which is traction. And so I think all of my fellow panelists touched on it. The market, the economy, the size, etc. But the obvious thing is that you can't have all those. You can't meet those demands unless you have traction and you have the capital to. Unless you have the capital to get to your MVP. And so what I've unfortunately seen here, it's the chicken and the egg. So, we say that the founders don't, haven't been able to rise to the occasion, and I see that there's a lot of focus on building out skills and building out talent. However, there's not enough focus on the capital side of things. So, off of what my fellow panelists have said, something I think that would be extremely important to focus on intergovernmental relationships. And seeing how, I know Toby mentioned it, being part of the EAC and being at that 300 million number strong, as opposed to just the 40 million number. And if Uganda or the startup ecosystem here is able to focus more so on collaboration, so at Ingressive Capital, we're ecosystem builders, from our LPs to our non-for-profit to our ecosystem mixers and the actual investment vehicle. We look at the 360 picture and we call it the flywheel effect. And if you're able to bring the ecosystem together in a way that is synchronized, you optimize for success.
Awesome. Optimize for success. And you know, listening to you talk, ecosystem, it's very important to highlight that a lot of progress that has been made has been on the strength of the collective ingenuity of the ecosystem in Africa, and hopefully that is going to continue. Brings me to Toby. We've heard about startup acts, Tunisia, Nigeria, South Africa, and it's one thing to have a startup act. It's another thing to implement. Execution is key, right? So Toby, and we have the government in the house. Toby, so what key initiatives, right, reforms, do you think the local stakeholders, the government, can deploy, right, to remove most of these barriers that we're currently addressing? And I can see the Honorable Minister, she's writing, right? So what key initiatives and reforms do you think could be sprung up to address some of these barriers so that we can position Uganda as an attractive market for early stage VC?
Thanks, Dennis. I would answer that in a different way. Every industry, every country has obstacles, and every ecosystem I've been in always complains to the government to, you know, take away all their problems. But farmers have problems, pilots have problems, every part of every business has problems. So, to be honest, I think, yes, the government has a role to play in you know, making things easier. But specifically speaking about Uganda, what, you know, taken from what some of my colleagues have said, it's clear that there are areas where Uganda has strengths. And I would piggyback off Eric. And to be fair, David pitched very ferociously to me about tourism. It was back and forth in my office.
David, you're going to pay for this. First, I mean, Eric, now Toby.
Unfortunately, I didn't invest, so he has the scars.
He's waiting for you.
But the point is, Uganda actually does stand out when it comes to tourism. It does have advantages, right? And I think one thing the government should do is pick the industries where Uganda can stand out. Doesn't have to be 20, it could be 2, could be 1, could be 5, but pick them and then back them. Because foreign investors coming into a country and seeing that the local ecosystem has backed this entrepreneur with $10 million, they will put dollar for dollar. And what that means is that if Uganda says these 5 industries, these 3 industries, we're going to back them, these 5 companies, we're going to give them and focus on them, make sure that they deliver, because these are Ugandan icons. This is what we're going to use for the next generation. You will solve the obstacles because once the government of Uganda has put $10 million into a particular business, whatever obstacles are in the way, it will get cleared. A, the capital will clear it, but B, the focus will allow people to see. And C, foreign investors like myself will come in and be like, okay, I see the point. I'll take tourism, for example. I see the point. great chimpanzees. I was looking for them on my way here. I couldn't find them. I mean, I'm terrible. But I was, I was like, where are my silverbacks? Anyway, but the second thing is, if I know that the local ecosystem is committed, it gives me more confidence to say, you know what, this is going to succeed. So, and the last thing I would say is, apart from backing these entrepreneurs with capital, like serious capital, it has to be clear to an outsider that these companies are being backed. The last thing is openness. Openness to working across EAC, extending it, showing love to Tanzania, Kenya, whoever. But the point is, in the long run, it would end up paying Uganda. My 2 cents.
Awesome, awesome. Thank you. And I love what you touched on, because we have our tech journalists in the house. Hardly any tech article you would see a lot about the local investment community being nascent. And you would agree that a large part of the funding that has come into the African tech ecosystem is largely foreign driven. So moving forward, what role do you see that collaboration between foreign investors, local stakeholders, what role do you see that collaboration playing in fostering a much more robust and diverse venture capital ecosystem?
Thank you for that question. What exactly is the definition of an ecosystem? An ecosystem is a combination of different parts playing their functions well and operating together in tandem. And you cannot build a thriving ecosystem without all the stakeholders playing their parts, from the government to the private investors to the founders themselves to the regulators to the foreign investors and all. And like everybody has said here, oftentimes you don't expect a foreign entity to come back the ecosystem if the locals are not doing it themselves, if they're not putting their money where their mouth is. So we know a lot of ESOs exist in Uganda, and well done for the job that you do, because we see that in the quality of the founders that we speak to. But much, much more can be done. And it's not something that happens in a day. I mean, Silicon Valley wasn't built in 1 year. It took years. Venture capital didn't start today. It took years. So it's a painful process, but we are getting there. As Uganda and as the African continent, when we talk about the big four, the big threes, you still see that it took a painful process. Toby would recall that in 2005, if you were cutting a check of $5,000 to, it was unheard of to actually give somebody $5,000 to fund their business. And at that time, you would ask for 50% of the business. Unheard of, right? But now, people are raising $1 million like it's their pocket money. Obviously, it's not your pocket money. But Uganda will get there if everybody actively plays their role. As the ESOs are working, the government is actively backing the founders and creating an enabling environment for everybody to operate. You cannot out-innovate bad, policies. That's just the truth. You can sidestep. We always do that in Nigeria and across Africa. But in the end, bad policies would eventually slow down the growth. So, the government has to play their role. The founders themselves have to play their role. You have to be ambitious. Nobody's going to back a founder that is not ambitious enough, right? Again, back to what I said about narrative. You have to be very ambitious enough. You have to understand your business. Nella talked about, understanding the metrics. If I'm speaking to you and you just want to build a traditional business, don't expect a venture capital or a venture capitalist like me to invest in your business. Also, understand the various alternative funding sources, because equity is actually, I know I'm a VC, but I'll tell you for a fact, equity is one of the most expensive investments you can raise. So start thinking about alternative funding sources. And yes, the traditional institutions, the government also have to provide the pathway to those alternative funding sources, be it debt capital or grants or whatever the case may be, but start thinking opportunities than thinking of, we don't have that much investment in us, people are not backing us, they say we're too early. Start figuring out creative ways to outgrow those problems, because eventually you would outgrow those problems if you just keep on hacking at the problems and working hard at it. Thank you.
Thank you, thank you. And speaking of, so our panel ends in the next 10 minutes, so we're just going to keep it concise, right? And you would agree that it's been very engaging, right? Highly conversational. Awesome. So, Rio, he talked about alternative funding sources. In your experience, what steps do you think local founders in Uganda, right, can take to make themselves more attractive, right, to investments coming into the ecosystem?
Exit. So they need to see exit again. I think that's already happening in Kenya, I think. There are several local investment groups. Normally it started with a circle of friendship. Normally the business owners or maybe senior executives or big corporates, like the likes of Safaricom or insurance companies, those guys started to pay attention to angel investment. I think it started about 10 years ago, like early ones 10 years ago, more active maybe 5 years ago. And then I see some actual exits from these angel investors. Not the full exit, not the full exit as a company, but because they came in very early, at the pre-seed stage, stayed on for 3-4 years, and then they managed to sell their stake to the subsequent investors. I see that happening in Kenya. So I think if you can, to stimulate interest from local investors, I don't think you need a full-blown exit to showcase. What you need is to bring in institutional investors who can write maybe 5 million, 10 million type of ticket size, maybe Series B type of investment. If there is a group of angel investors who has been in that company who is raising Series B, and then see that Series B investment come in, 5 million, 10 million, whatever, then there should be an opportunity for these investors to sell off these stakes. And then there will be a ripple effect, because these guys will whisper with each other that, oh, I made 2x. Of course, it's not going to be 100x return, but maybe 2x, 3x within 2-year, 3-year time frame. And that's the snowball will start rolling off. So I think, yeah, to put it simple, maybe you'd want several proper Series B rounds happening in Uganda, I think. I know Tugende was there, but they're a bit in trouble, unfortunately. But if you have several more of that, I think that will affect a lot.
Thank you. So as this panel comes to close, Eric, I've been to Ghana a couple of times, right? And I'm aware of programs.
Ghana is Uganda without a U.
Yes. So I've seen programs, right, that Ghana has initiated to nurture the development of startups, right, and just growing a more supportive ecosystem. So what programs do you think the Uganda local stakeholders can initiate to also nurture local talent and startups in Uganda?
So you need a strong talent pool for this stuff to work, right? So the academic institutions need to start producing the talent that tech companies need. And this needs to be a very deliberate effort. Otherwise, what will happen is that you have founders here and most of the teams will be outside of Uganda. So having the academic institution being deliberate about producing computer science graduates, engineers, software developers locally is super important. And that is also another way that you can jumpstart a whole new activity around outsourcing. So one of the ways that India made its way into technology was, I don't know if you remember Infosys. There was a famous Indian company. So the Indians who were in Silicon Valley decided that they were going to start outsourcing Silicon Valley development into India. And they first started by forcing institutions in India like NIT to produce computer science skills, programming skills. And then they would start outsourcing jobs into India. And that's how Indians started learning, and then slowly they became, and today, Indian developers are some of the best in the world. And so companies outsource talent to India. So that's one strategy that Uganda could take, is that, and I see that Makerere is one of the best universities in Africa. And I see a lot of very amazing academic institutions. if you can get them to focus on producing the talent pool that this industry needs, that's another way where you can start driving outsourcing from the sub-region, even from Africa, from Ghana, from everywhere. You know, you can have engineers here who are writing code for the rest of the continent, and that's a way to jumpstart the economy. The second is related to that Ghana did, which you can learn is, in 2014, we passed an act that created something called the Venture Capital Trust Fund, where the government deliberately puts money to back VC fund managers. And we benefited from that. And that's how the VC industry was jump-started in Ghana, where the government deliberately started allocating to VC because VC was seen as a much more risky asset class. And then now the government has liberalized that space that pension funds and endowments can now start backing VC. So suddenly you see more capital going there. And once you have that local capital going there, it will attract more foreign capital.
You want to touch on that?
30 seconds, just wanted to add that. Okay. It's not just tech skills, right? There are actually non-tech roles that have to be filled. The strategists, the project managers, the operations managers, and those are core skill sets that we actually lack on the continent generally. And it could be that Uganda could be that city or that country that produces the best managers in Africa. So it's not just the tech talent, it's also the non-tech talents.
Non-tech talent.
Sorry.
Awesome. David, did you get that?
Sorry, Dennis. I wanted to add to my colleague here's point.
I love this panel.
Because I'm not sure people got what he was saying. You need a full cycle for investors to believe. And everybody has been talking about cycles. So it's about early stage investors, local Ugandans, they put in money. The government needs to think about getting them the full cycle. Because once they come out, boom, you don't need to write any article. When people came out of Paystack in Nigeria, everybody knew. It was clear. Entrepreneurs, people were backing other people. In fact, I have so many traditional investors as LPs, and they call me and say, hey, Toby, this thing works? I'm like, of course it works. But they only said it because some of their friends or people that they know got exit. So what he was saying is super important. Making sure that people come out. So you need to make sure the early stage guys come out. You need to make sure that the later stage guys believe that something can happen. But once you show one cycle, boom, you're off.
Thanks. You said boom twice.
Just one thing.
Okay.
Just
we have 5 minutes.
Yeah.
Can you keep it very short?
Very short.
Very short.
To his point of non-tech talent, I want to add something. Like, we need someone in financial capacity, like a very robust one. Because unfortunately, when companies grow, monies get stolen in some way or another. It's a big program. Basically, we need to find ways to institutionalize innovative business ideas into proper organization. After Series A, you have to think about it really. It's a big problem, not only for Uganda, everywhere. It's a big issue. So we need, because Uganda is still not that at that point, having many Series A, B, but you have to think now ahead for maybe 3 years, 5 years to come, to have the talent pool to make sure these companies will become institutions. Otherwise, money will be stolen everywhere, I can guarantee.
You've just given me my new slogan for Uganda. Think now. Think now. Thank you. Nella, thank you for your patience. I know you're thinking now. So, just before we take final parting shots, Toby talked about Paystack. Very interesting transaction. So we're talking about success stories. At Ingressive, what success stories do you think the Uganda tech ecosystem can learn from?
So what success stories? The reason I was raising my hand was
yes, you wanted to piggyback.
Was I was very happy you said that, because I wanted to add on that corporate governance is key. So as Segun said, think now. Unfortunately, we've seen a few bad actors in the ecosystem, and because of that, it has made foreign capital a bit more skittish. and we're also aware of the macroeconomic situation globally. So if we're building out a vibrant entrepreneurial ecosystem in Uganda, I want everyone to be extremely cautious about the now and the corporate governance and how they're managing their finances and institutionalizing it. And so back to the question.
Tech ecosystem can learn from.
What can Ugandan tech ecosystem learn from investment stories in Africa? I would say, so at Ingressive, we invest in Nigeria, Ghana, Egypt, Morocco, Kenya, hopefully Uganda next. What I think that a lot of these economies have in common, one, it's mobile penetration. This is something that was touched on yesterday. The cost of data here is a bit higher than we see in other thriving venture capital ecosystems. So getting that down would do a tremendous amount of good. So it's mobile to penetration, obviously the population and how we can use partnerships to bolster that. And in addition to, we're also looking at GDP per capita. At Ingressive, we focus at around 2,000 to 3,000 GDP per capita when we're investing in the economy. But when it comes to like actual success stories, I mean, Toby gave the extraordinary one of Paystack. We were investors in Paystack, and we were actually their first check into, we were one of the first checks into Paystack. And what we were able to see there were, one, the tenacious founders. They were also able to have a very clear pathway, which is something that we see missing in a lot of entrepreneurs today. So having that clear vision, understanding how to execute, and being flexible in the ecosystem to pivot if necessary is something I think can be learned within this ecosystem.
Thank you, Nella. So we want to look back at this summit. We want to look back at these panels and smile with that sense of fulfillment that most of these suggestions are being implemented and we're seeing them come into fruition, right? So just as your parting shots, very short, we have the ecosystem in the house. What's your advice, that one advice to leapfrog, like my Oga stressed yesterday, to leapfrog Uganda and put it on the map? So we're just going to do like this. Yeah.
Keep organizing this kind of event. It's impressive, The first step is to come and show up. Like, let investors show up, understand, and communicate. So I very appreciate this opportunity. Keep doing it.
Thank you. Toby?
Hello? Yeah. Back your entrepreneurs to the hilt and let the outside world know that you're backing your entrepreneurs. It would increase confidence.
Back them. Back your entrepreneurs. Thank you. Nella.
Toby took my point, but the government is supposed to be a catalyzing factor in this equation. So once more, back your entrepreneurs, but also create an enabling environment. And I know there's a lot of talk about AI right now. I think it's important to focus on core infrastructural issues that are addressing the nation and maybe not leave AI to the West, but let's focus on what is most crucial to the economy right now.
Awesome. Eric.
So we've done 2 investments. We're going to do a third one. And our focus
Interesting.
is how do we get these 3 to be very successful? And then the story will tell itself.
Story tell itself. So we're looking forward to your third investment, or fourth. Uben.
I'm going to take a slightly different approach because I'm the last person.
You're a Nigerian.
Thank you very much. The audacity. So I have 3 words, 2 for founders, 1 for the ecosystem. The first one is the art of going to market is what gives you product market fit. Keep building, keep working. You can't just sit down in your room and expect to get product market fit and say, oh, the economy is bad, it's not happening. Except you're executing, you will never get product market fit. The second thing, which is counterintuitive to what some of us have said today, is focus on the profits. It's not about the market share. Make money. It's what actually interests investors if they see that you're making money and can scale that over time. And lastly, to the ecosystem, money flows as a result of stories. The storyteller is the most powerful person in the world. Tell your stories.
Awesome. And clap. And mine is think now. Thank you.
Another round of applause for our investor panel and the very important conversation around why aren't you investing in Uganda and how can we make it easier for you to invest in Uganda. As they take their photograph, I would like to apologize about the air conditioning. It should be on in a few minutes. Something about the generators. Thank you very much. You know what's great is I was sitting in the audience and watching this panel and thinking to myself, wow, I've met some of these guys, and I can tell you it's hard to pitch to Toby. Yeah? You have to have your facts, because he just keeps shooting back questions like a Nigerian. I wish he would, Toby, you need to learn from what Wem said about the Ugandans when you're asking those questions. Be nice. Say, okay. But we're starting to learn and starting to grow and to build the confidence. It takes confidence in knowing what you're doing to be able to go out and pitch and ask for money as you need to. What's interesting about this Science Week is it's not just conversations, it's also deals. What we thought was that by bringing the right people into the room, we can actually drive some commitments. And I'd like to announce one commitment and actually have it signed in front of you. So the deal has been done between Nextera Capital and StartHub Uganda. StartHub is a local incubator, and Nextera is a global VC fund. I'd like to ask Matthias and Rohan to come up to the table over here. What this deal represents is Nextera will have visibility of the pipeline from StartHub and commit to not only exposing them to the investor network, but writing checks between $100,000 and $300,000 to some of the ventures within the portfolio of StartHub. So they're going to sign it formally over there, and we're all witnesses, so we can then ask Nextera next year, how many did you invest in? If we get some media here quickly, just a photograph. Yes, Matthias, it's happening, so go on and just let's get the signature done. So, interestingly, Rohan signed fast. So Nextera signed the contract fast. It means they were that excited about this deal. So now, Honorable Minister, we can say that we have a Canadian VC fund actively investing in Ugandan startups. And I think that's something worth a round of applause. Thank you very much. I thought the DJ would play my Tusimbu De song because that's the perfect place to play it. Thank you very much. At this point, I'd like to recognize the arrival of Madame Pamela Mbabazi, the chairperson of the National Planning Authority. And it's very important she's in the room because as we ask for 500 billion, we need all the all the support to make sure we have it. I'd like to also just share a quick change in program. We were supposed to have a tea break, but we think we should just have the second panel before the tea break. So I'd like to invite the second panel, and it's going to be moderated by Bunmi. Bunmi is a co-founder at Greenhouse Capital. Bunmi, are you in the room? Yes, great. Please come up. And on this panel, we have Mr. James Otto, Senior Investment Manager at Uganda Development Bank, Mr. Kagatso Tlakudi, consultant with African Renaissance Capital, which is part of the Thabo Mbeki Foundation, Mr. Stevens Mwanje, the CFO of the National Social Security Fund. Last I checked, over $5 billion under management, so we'll call you the $5 billion man. And we also have Mr. Apollo Muyanja Mbazira, Project Director at the Private Sector Foundation. And I found out yesterday that PSFU is soon launching. I'm not sure if I can mention this. So sorry. We have an S stage. It was innovation as well in a way. Also would like to invite Apollo, Mr. Apollo Muyanja-Mbazira. I was mentioning that PSFU is launching a catalytic fund. So Toby, we have money, we are going to be investing our money into Ugandan ventures. And lastly, Mr. Joel Muhomoza, who is the CEO of FlyHub. FlyHub is Stanbic Bank's fintech arm, and they actively work with Ugandan startups. This panel is going to be answering, we've had the investors speak, but we want to also know what's happening in the ecosystem. So please, Joel, over here. Thank you very much. Over to you.
Hello, good morning, everyone, and I welcome you to this second panel. I think this should be a very exciting one. As we said yesterday, it's time to leapfrog, it's time to fly, and I think Uganda is ready. So the topic today is very, very interesting. What is the role of government and corporate institutions to unlock early stage investing in Uganda? Okay? And we have an incredible panel up here. So I really hope this is going to be very, very exciting. Now, we do have one flaw with the panel that we have on stage. And the flaw is that we don't have any female. So we're just owning up front and apologizing because, yeah, for different reasons. But anyway, still we're going to make this really, really exciting. I think David already did an introduction. So in terms of, the roles and titles of everyone. So I'm going to just try to jump straight into the discussion, and I'm going to also try to tie in why each individual is here. So I'm going to start on my left side here with Joel, and have Joel maybe just introduce himself very, very quickly, and I'm going to tie that into the topic for today. So Joel, please introduce yourself.
All right, thank you. My name is Joel Muhomoza. I'm the CEO of FlyHub. FlyHub is the technology subsidiary under Stanbic Holdings, Uganda. So a few years ago, Stanbic realized that we could do more in this economy, that there was more to be tapped into than just the bank. And so we portioned off 4 subsidiaries, one of which is an incubator, Stanbic Incubator, that incubates businesses primarily for the oil and gas sector, but also expanding to different areas, including tourism and agro-processing. We've got a real estate arm as well that manages a number of properties and does brokerage services, a wealth management arm, and then myself. I'm not usually in a suit, so if I look a little bit ill-fitted, it's because I'm usually a tech guy. And what I do really is I'm building API and cloud-based infrastructure for a lot of the fintechs that want to partner with the bank or want to come into our ecosystem. So we're looking at creating infrastructure to enable the digital future of our country. Thank you.
Awesome, amazing, amazing. Thanks, Joel. And a lot of what Joel is talking about and what he will talk about is the role that a bank is playing to essentially enable the startup ecosystem. Okay, thank you very much. Then I'm going to move to Apollo. Apollo, please introduce yourself.
Thanks, Bunmi. My name is Apollo Muyanja-Mbazira. I work with the Private Sector Foundation Uganda. So for you who may not know about PSFU, we are the voice for corporate institutions and associations in our country. So since 1995, we have played the role of supporting businesses and business associations in our country, close to 300 business associations, in advocating for a competitive business environment with government. And we're working with a number of partners, including the Ministry of Finance, Ministry of Trade, the World Bank, CEDA, UK government, representing a number of sectors, about 13 different sectors. So I'll get into detail as we get into that discussion. Thanks.
Fantastic. And we're going to ask him a lot of tough questions, right? Because there's lots of corporates in Uganda making a lot of money. And then there's a lot of startups who don't have a lot of capital, right? Why? So I'm coming back to you, Apollo, shortly. So now we're going to move to Katatso. Please, can you introduce yourself?
Good morning, everyone. And again, thank you for having me here. I'm Katatso Tlakudi. I'm the technical consultant to African Renaissance Capital. It is part of the Thabo Mbeki Foundation. In ARC, we are primarily looking at investments whose proceeds are intended to ensure sustainable funding of the foundation going forward. Until recently, until June this year, I was the Director General of the Department of Public Enterprises. It's a shareholder department of some of the big corporations, state-owned corporations in South Africa. ESCOM, which has been, was until recently, a strategic equity partner to the local utility, Transnet, which is in ports, pipelines, as well in rail, and a couple of other entities in the interest of time that I will not mention. Thank you again for having me.
Thank you so much, Katatso. I really appreciate that. And of course, I don't know if you heard it, the Thabo Mbeki Foundation, and also the fund side of it. So I think we're going to have a lot of interesting conversations, especially from the standpoint of South Africa, you know, and the big fund. We all hear about the PIC, right, which is a massive fund in South Africa, and essentially, how do we replicate that here? So awesome. So now I'm going to go to Stevens. Stevens, can you introduce yourself, please?
Thank you very much, Bumi. Is it good morning, ladies and gentlemen? I'm called Stevens Mwanje. I'm the CFO of NSSF. As most of us here know, NSSF provides social security and retirement benefits for Ugandans. Our size now, we have a pool of around 5.4 billion shillings in retirement funds. That's about 20 trillion Uganda shillings. Basically, we do quite a bit in the economy, for the Ugandan economy, and that's a story we're always happy to share. Thank you.
Awesome. Thank you so much, Stevens. And Stevens, if you didn't hear that well, from a startup standpoint, looking for capital, this is your biggest fund that's sitting in the room, right? And then also for fund managers who are looking to deploy in Uganda, perhaps if you do a little more Ugandan investments, maybe you can hit Stevens up for some capital as well. So we're going to come back to you shortly, Stevens. So now I'm going to move to James. And James, with the UDB, would like to have you introduce yourself, please.
Good morning, everybody. I'm James Otto. I'm very happy to be here today. I work in UDB as the Senior Investment Manager. UDB, we do a lot of things, but specifically our priority is to intervene in sectors that have a lot of socio-economic impact. But for the purpose of today, we do support and we do invest in science, technology, and innovation. We also participate very actively in private equity and venture capital. But I'll talk more about it as the discussion moves on. Thank you.
Fantastic. We're done with introductions. Let's jump right into it. And I'm hoping that I do a good job of asking very, very tough questions. If I don't ask questions that are tough enough, then I want the audience to challenge me. So I'm going to start with the first question. And the first question is, essentially, in America, I don't know if everybody knows the statistics, but essentially 90% of capital that goes into innovation actually comes from public entities, pension funds, Department of Defense, and essentially government-linked entities. The day I saw those statistics, I was shocked, right? And if you take that further with examples all across the world, we start with South Africa and the PIC. The PIC moves some cash. You go to Saudi and you have the PIF. The PIF moves some big cash, right? Then we move to the UAE and you have Mubadala. Mubadala controls a lot of capital. Then I move over to China and I have a lot of the state-owned banks, right, or state-linked banks, and I believe 95% of Chinese investment into Africa is actually controlled by these banks. Now let's come back home. Stevens, I'm going to put you on the spot. We are not seeing your hand. I think that's how they say it in Nigeria. We're not seeing your hand. And we understand that you are the largest fund for Ugandans, and we're not seeing your hand. So tell us if you're doing anything. Let's move this money. Am I speaking for the public here? Yes.
Okay.
Yes. Please give me a round of applause if that question was solid. Thank you. Thank you. Thank you. Thank you. Stevens.
Well, Sobumi, before you start chest thumping, I think I should first take one step back before we move on. Like I said, what we hold are retirement funds. So the first step about dealing with retirement funds is the word safety, because we can't lose them. You have to remember there's someone else who is seated in that audience clapping right now, whose funds have to be safe. And all investments have to be well governed and safe. But having said that, it's not actually true that we are not seeing our hand. Probably we just have to do a little bit more chest thumping than you've done to show you what you have done. When I've sat around and I listened quite a bit, and one thing I noticed that all the people who are here are kind of looking at the businesses, at funding businesses that have already established themselves, that they are already to scale. But those are very few in Uganda. But who is looking at the base? Because we have to have the base, and that's where NSSF has come in. Because what we have done is that we've partnered with MasterCard Foundation, and we are looking at seed funding, the small and growing businesses. And we have been doing this successfully for the past 3 years. We have a target of to start with in the first cohort, around 500 of them, to train about 75,000 entrepreneurs, looking at the business hubs, which are the ones which support the businesses. We are deliberately growing and training them across the country. They used only be in Kampala. Everyone is concentrated in Kampala. We have made a deliberate effort to make sure that we grow these across. And what we are doing right now, we are giving what we call seed funding to catalyze their businesses, to make them investor ready, so that now the partners who are here are able to fund them. When these kind of businesses go to the banks or go to the financiers, they are never looked at. We give them the base, and that's where NSSF has for now concentrated. We can share, we've had quite a bit of success so far. We have rolled out over now about 200 of them, where they are employing around 110,000 Ugandans. We have trained and grown about the support groups around 16 across the nation. And we are continuing. We'll continue scaling as and when we move on. Yeah.
Awesome. Thank you very much, Stevens. And I think Stevens is saying that we should be seeing their hands. And I think some of the things that resonated with me with what you're saying.
Because we are looking at the future.
Yeah.
Because most of the people who are now are dealing with what is here now, but we are looking at the future. We want what is the future of the business in Uganda. So if we do not support these businesses, the people who, the young, or even if they are young or old entrepreneurs who are willing to grow, to take that jump, and they are at that stage where the banks and other financiers are not in the position to give the money. NSSF is taking the risk on this so that then they can be able to scale their business.
Fantastic. So I think what Stevens is saying, I see a lot of sense in that. And maybe that comes back to what we said yesterday about the iceberg that you don't see. The idea is that as a lot of these seed, early pre-seed investment you're making is coming out in partnership with MasterCard, hopefully the VC community will start seeing more pipeline that is ready as a result of the work that you're doing. So fantastic, and thank you for that. But my second question is that, okay, we understand that you hold the money of Ugandans and you need to hold it safe. We hear you in terms of this risk capital that you're bringing in that we're going to be seeing. But my second question for you is to also challenge you to say, obviously, you can make these investments into these small, tiny companies, but at the end of the day, you're a huge company. You're a huge, massive organization, and you can't reach everywhere. You're not investing through funds, right? So there are funds who have the structure, who have the infrastructure to find deals and invest in deals. And when you see Mubadala, PIC, PIF, they actually also invest through other funds. So on behalf of the audience, I'm going to ask that why are we not seeing your hand as it relates to investing through funds?
Thank you, Bumi. And that's basically, that is the second step we are involved in right now. Because we realize, yes, when you give these small companies seed financing and then they are ready to scale, then what? Now we are moving into that next phase. Right now we are talking to so many, quite a couple of credible partners, both in Uganda and in the region. And what we are going now is now to help the businesses to scale. Because if we have been saying that we give you seed capital of say $20,000, now we are starting the next cohort. We have a cohort which we are giving 75,000. They have scaled, they have been ready to scale. But with the partners we are working with, we are looking at funding these businesses up to $200,000. So we are going to be working with the likes of Jones and UDB. We're already working with UDB actually to help them scale. Those businesses that have been incubated, they can have a direct line to go to UEB and get some development funds. But we are now growing this. This is something that should be done by the close of this calendar year, where I should be prepared now to be able to move to that next step.
Fantastic. Please, let's give Stevens a round of applause. What I'm hearing is that they're going to start also working through intermediaries and working through other funds. Example with Joel here, you know, an example with UDB as well. So this is great news. He also gave a timeline. So that is really fantastic. It couldn't, I don't think that applaud was loud enough. Otherwise, please, let's give him a round of applause. You know, fantastic, fantastic. So I think I'm going to move to James with my next question, because James is also kind of linked to development, linked to government, and the statistics I mentioned earlier, I think is also very, very applicable. Now, obviously, UDB is a development bank and focused on developing the ecosystem. And really, my question is, considering the lack of deal flow that some of the investors are talking about, considering the lack of, enough activity from state-linked entities in terms of bringing in the local capital. Yesterday, one of the discussions we had was the fact that if global capital is going to come, global capital is always very interested in saying how much capital has been deployed by local HNIs, by local pension funds, by local development banks, because the investor is not here sometimes, right? They don't have boots on the ground. So they want to know that they are following on local capital that has put their money in. The question is, why is UDB not doing much? They're saying they're not seeing your hand either. So please go ahead, James.
Thank you so much for the question. So UDB, we're actually doing quite a lot in the space of startups, in the space of science, technology, innovation, and we are doing along the lines of both debt and equity. We have areas where we want to focus our interventions. These are the areas where we believe if we put in our funds, we shall be able to unlock the maximum impact. Things like productivity acceleration, things like industrialization, things like creating more jobs, things like opening more markets. It's along those lines where we are actually putting our intervention. We have made a number of investments as we talk at the moment in the private equity space and venture capital. Our total commitment really is it's around 35 billion. So that is and that is just the beginning. We are still having commitments to continue putting in more funds along this line. Now, besides investing directly, we also have other services that we do provide that is complementary to the financial products that we have in the market. We have something we call business advisory, where we try to work with enterprises to de-risk the ones that are coming in, and then also to ensure that there is sustainability for the ones that we are putting resources. We also have something we call project preparation, where again we use some bit of seed capital to try and de-risk the projects to be able to attract the lenders that ordinarily will not be able to find these projects ready. We have instruments that we deploy. I spoke about the private equity, but we also have debt, we have structured finance that we do give to these enterprises. So yes, we have done a lot, but it's just the beginning. Our appetite is increasing. Our interest to deploy more funds in the startups ecosystem, in STI, is really, really up. Yes.
Thank you very much for that. And what I'm hearing is that UDB is already deploying different instruments, debt, equity, quasi-equity, private equity, all of those type of things. But let me ask you this. These investments, are you making them directly into these different companies? Obviously, you have an industrialization agenda. Are you making that directly? Are you making that through other funds? Can you answer that question, please?
So if you look at the market at the moment, there are, I could say there are two channels through which startups can access funding. The market is dominated by fund managers. Whether you're looking at pension fund like NSSF, whether you're looking at private equity, venture capital, growth equity, these are all GPs that capitalize, and they are basically managing the fund for the startups to access this money. Now, what we are providing in the market is an alternative way through which startups can actually access funding. The reason we do that is, first of all, we are very selective about the areas we want to participate. I spoke about that we only want to invest in sectors where we believe we are creating a lot of impact. Number two, because we have complementary, what we call the non-financial instruments, we find it easier to administer these instruments directly rather than through the funds. Number three, we have preferential terms. If you look at the terms under which the startups can access the facility, if you compare to what the market offers, if you compare to what the fund manager offers, we are not just competitive, we are almost below what they're offering. Now, if we move through a fund, there is a markup cost that is going to arise, and this markup cost is going to be transferred to the final beneficiary, who are basically the borrowers. So we try to make sure that the cost of borrowing remains as minimal to the extent possible by reducing the intermediary cost of financing.
Yeah.
So we believe by us focusing on investing directly to the startups, we are able to give them really competitive rates. But that doesn't mean that investing in funds is a bad idea. Like I said, really it's because funds brings economies of scale. And the market really, over 90% of it it's really fund of funds. Yeah, thank you.
Fantastic, fantastic. Thank you so much, James, for that. And I think your point is really very, very interesting in terms of the development angle, the better rates that you bring in, and so on and so forth as you make this direct investment. So I'm going to go over to Joel. Now, we all know Stanbic, which is part of the Standard Bank Group. I think arguably one of the largest banks in Africa. And essentially, you are also coming in as the technology arm, for Stanbic. I have 2 questions for you, and the first question is, the perception typically of Uganda is that there's not enough investable technology companies, right? I think there's not enough investable technology companies, digital companies, right? That's the perception, that it's really more of the real economy only that exists here. As a tech person, as a tech venture builder, investor, as part of the largest bank on the continent, I'd like you to speak to, that particular perception. And then the second question I have for you is around the comment from James as well, in terms of these state-linked, entities, development entities, should they only be investing directly or through funds? Which one is most beneficial?
All right, thank you. So there's a gentleman in the audience, Mr. Wavamuno. I want him to stand up just for a moment, please. That man with an afro is part of the board of FITSPA, which is the Financial Services, association, right? So they are putting together a number of the fintechs, a number of the technology providers. And the reason I wanted him to stand up is if you don't talk to him, you'll have come to Uganda for no reason. He's at the heart of the engagement with government in terms of even crafting a policy for how fintechs are going to be guided. One of the big issues that we had here was you could just come and build anything, and you could hold people's money. And if you look through our press, we had a number of initiatives that came through that were basically Ponzi schemes. So what you might be seeing and what you might be hearing is sort of echoes of the old world of where Uganda was. But I'll tell you that the reason I'm sitting here is Stanbic, with a very large balance sheet, decided it was not enough for us to just focus on the real economy, quote unquote, but to look at what the enablers of the future are going to be. So fintech is the future for us, but we don't know enough to do our own fintech. So why I exist is to build that layer where there are certain things that a fintech can do really quickly, scale really fast, get wallets done. But what we have is infrastructure. We can help them with anti-money laundering, would help them with counterterrorism financing, would help them with cross-border remittances. The fact that we can grow only through partnership is where I see the big connection. I'll give you 2 examples of where technology is taking us now. The bank, just as Stanbic Bank, if you look at our unique count of users, of customers, is just 3 million. Through FlexiPay, we decided to create a mobile wallet which would sit on people's phones, and it's at 700,000 now. You don't need to have an account with us, but you can do free transfers. We did that for 2 reasons. One, to do financial inclusion and understand where everyone is, we needed to be on people's phones. And mobile money in East Africa, I'll tell you, it's a big bonanza. East Africa is the mobile money market. The panel before was talking about the size of Uganda's economy. Our GDP is at about 45 billion, but the East African economy is at about 165 billion. Now, if you look at Uganda on its own, it's not a very good place for you to invest. But if you look at the cross-border flows, if you look at the foreign remittances coming through here, this is where growth happens. And from my time in the US, I think a lot of us look at the US as, the Wild West and where a lot of things happen. Sometimes I get bored with that narrative. But the one thing that I challenge a lot of us, and I would challenge the people in this room, is we are tempted to look for an easier path for scaling. But this is where growth is going to be happening. We've got a very young population. We've got growing sectors. The oil and gas initiative that's coming in is going to need a lot of investment in technology, and that's where we're positioning ourselves. It'll be too late when you see the benefits, when you see the potential. It's now when you meet the organizations that are here. The fact that NSSF is here, the fact that I'm here, shows that we appreciate that there is something actually going on. So from the technology front, you'll start to see the ripple effects coming through eventually. I also want to make one more point. I know the minister is not here, but from the government side of things, there's something I learned in my MBA class, which was, it's called the shield of boring. And there are certain things which you start talking about that are really so boring and people's eyes start to water. But those things matter. And one of them is, for instance, government procurement services. One of the things I've pressured government about is how do they procure financial service systems or technology systems. Those procurement laws reflect old world thinking. One of the things that could easily be done is the right to repair. You purchase some software and you have the right to have people in local nascent industries do some repairs. That gives someone, a starting point where they can have a contract to do work for the government. Oh, I see the Honorable is here. Maybe they'll record some of my comments for her. Yeah, so thank you for coming, Honorable. One of the things I'm talking about is how government procurement happens. I think there's something along the lines for all the government systems that are being built to have local contingents do that. Let's build Uganda by buying Uganda and also allowing us to fix and enhance systems that are built from outside Uganda. The last comment I'll make on that is just around the difference between technology and the rules of technology. So the tech part is always easy. It's the rules around it. If you try and look at the richest men in the world right now, and they're all men, from Elon Musk to Mark Zuckerberg to Jeff Bezos, all of them don't earn profit. They earn rent. Anytime I send an email, Bill Gates is getting something. Anytime I go shopping, Jeff Bezos is getting something. So when we look at it that way, if we don't own the infrastructure, the tech upon which products are going to be built, we are always going to be chasing our tail. So that's why instead of us becoming a tech company that's just doing products, we looked at infrastructure. So my plea here is, as we're building this infrastructure, the companies that are going to be invested in by these gentlemen will have rails upon which they can run. Now, to your last question about whether they should be invested, I really think there should be some diversification of that investment. Why? If you look at the NSSF High Innovator, we are sort of upstream from them in terms of the incubator teaches some of these businesses governance and gets them ready to go to High Innovator to make some money. But the unfortunate thing is they get really small ticket sizes, these really small amounts. And what ends up happening, maybe the next time we have this conversation, we should have a certain party that is influencing how that happens, and that's the NGO sector. So NGOs are providing a lot of impact money at a low rate or even at a zero rate. And what's happening is then the businesses that should be learning, how to be competitive, how to, actually get funding that's going to put you with some obligations, they are usually the ones winning grants. And I think as a policy, we need to think about who should be getting grants and who should be graduating out of that grants level. Because if I'm competing, say, in the SACCO business, if I'm competing with another person who's getting a zero-rated grant, my pricing is not going to be reflective of what it actually costs to do something. And I think that's where we can see the private-public arm where we're saying, no, we want you to actually pay back this loan. Put a squeeze a little bit on the entrepreneurs that are coming through. And then maybe people like me. We had a chief investment officer in the bank who used to say that it's a crime that we keep telling young people to become entrepreneurs. Because the panel before he had really said that you're not going to get a lot of investment if you're 23 years old. You have to be genius. At 23, you have more courage than brains usually. But are people like me quitting our jobs to actually go and start those companies? We're not, because we're looking at the environment and saying, I would rather get a steady paycheck. So things like this where you have pathways and infrastructure are more likely to have outside business interests where I'll be able to, you know, pivot and take my experience to start a company. Yeah.
Fantastic, fantastic.
Thanks, Mubi. Can I interject? John, thank you very much. I got interested in something you said, that after incubation, there should be other organizations that should help these young entrepreneurs to scale. So probably, I know we have been trying to work with UDB, Equity Bank, and ABI to make them ready. What is Stanbic doing in this to help these people to be able to access capital? Because ideally when a person walks in the bank, they ask for so many difficult things for a young entrepreneur to be having at that particular stage in their life. So how is Stanbic helping?
Yeah, that's a good point. So I think I'll make 3 comments to that. Number one, imagine you're a startup and you walk into me, the credit manager, and I've got a pot of cash where I could invest in government bonds, which are almost risk-free. And then I've got a large-scale investment coming in to do some infrastructure. And then there's you with a very nice story, but am I really going to be rewarded for taking the risk on you? So that's why we have these other subsidiaries. We have the incubator that's meant to create them in such a way and streamline them so that they have 3 years worth of experience, and then they get preferential funding. So we have a small pot of funds where they get that kind of funding. We've also been able to partner with our gentleman here, UDB, sorry, to be able to see how can we help put some money into the fund that they have. But more importantly, I think for us, we are not likely to be the ones that are going to do early stage investment. The returns that are expected of us are quite high. Last year, the bank made $1 trillion shillings, the first time in history. I'll pause for a clap. There was no clap. Oh my God. Anyway, so, and the reason we got there, now you understand shareholders are expecting a much larger return, but our responsibility in the market is to create an enabling place. And our enablement is through the technology, it's through the free business advice that we provide. We've also got a wealth management arm, which can allow you to be able to put those funds together. But I think we're looking at the much broader ecosystem. As a bank, we really can't do that much. What we can do is help facilitate the transactions that are going to be happening and open up our services to these startups. The other thing I'll say is, as a region, East Africa region, Stanbic Group is looking at bundling different ecosystems so that we can facilitate cross-border trade. I don't think you can scale in Uganda alone. It might make more sense for you to start Kampala, go to Nairobi, and then eventually with that money come back in and start looking at the other towns. But how do you get yourself set up in Kenya? How do you get your accounts happening? We're doing borderless banking, for instance, so that you don't have to move from one place to another. It's small steps. For me, it's often frustrating because the technology is available. It's just the underlying rules that have to be changed. But when there's demand like this, so for instance, I'm recording all of this so that I can take it back to my people and say, well, there are hungry people ready to invest. We have no excuse to say there is no demand. So yeah, challenge taken, sir. We are doing something.
Thank you, thank you.
Thank you for that. Please, let's give them a round of applause. Yeah, and thank you, Stevens, for challenging Standard Bank. That $1 trillion, you know, let's share some of it here, right? You know, so no, I think this is great. I like what he's talking about in terms of the FinTech Association. Right? That's big, right? I know people like Eric and a lot of investors in the room, Launch Africa, that are saying, hey, is that infrastructure and that regulatory framework ready? For example, if there are companies doing, you know, blockchain, crypto, who are doing, you know, digital banks and things like that. And I think a lot of what Joel is talking about is the time is now. They're already doing it. Right, with this fintech that has 700,000 accounts compared to the 3 million that the whole bank has. So I think that's very, very interesting. The procurement laws, I hope we capture that part of the recording. I think we should play that to the right group. But that local procurement law, I think that's a huge, huge point that you made as well. So now I think I'm going to go to Apollo. Now, we heard his introduction earlier as the private sector, you know, foundation. Now, what that means is that all those big corporates that are making $100 million in revenue, $50 million in revenue, all those families that own these conglomerates, the Indian companies, the Chinese companies that own these big corporations in Uganda. The question is, what is their role, right, in investing in startups? What is their role in investing in STI? Maybe they made their money from mining. Maybe they made their money from manufacturing or distribution. They take that capital and they keep it to themselves, right? When we look at other countries and you think about, corporate VCs, CVCs, right? When you think about even the successful companies we know today, the Google, the AT&T, the Vodacoms, just the big corporations globally, the share of corporates investing in innovation is very, very significant. And when you come to Uganda, it seems like nothing is happening. So, as the association that brings this group together, can you speak to us a little bit about, is there a role that you have to play? And is there anything you guys are doing? Because if the local successful industrialist in a country is not mentoring and investing in these young people, right? Why should Nella come here and put her money in that startup, right? When she's not sure that there's somebody mentoring this person, why would they put their capital? So Apollo, I'm sorry, we're putting you on the spot here.
You have actually. I thought we had agreed that all the tough questions would be directed at Stanbic and NSSF. Okay,
we
but
changed the plan.
You've changed. They gave you something small. Okay, so back to your question. I think there's a space for corporate organizations to play a role in supporting all the budding startups that we see surrounding us. And you gave a fantastic example of some of those geographies, geographical locations where this is happening. It's not happening in Uganda, but maybe the time has come for that to happen. Within Private Sector Foundation, we have an ambition to set up a private sector catalytic fund, a $1 billion private sector catalytic fund.
Wow, please, let's give a round of applause for that. Sorry, can you repeat that? I'm not sure that we hear that well.
Okay, so at the Private Sector Foundation Uganda, we have an ambition to set up a private sector catalytic fund worth $1 billion. And we have already started moving in that direction with support from the MasterCard Foundation. They've given us a lot of support to craft this vehicle, so the vehicle is ready and investable. We have an anchor partner that we are negotiating an investment of close to $300 million. And then comes in people like Muhumza here. He talked about the 1 trillion. Was it a profit? I want to hand him a pen so he can write us a check. Because this vehicle that we've set up, corporates like Stanbic and other large corporate entities in our country should indeed consider channeling some of their profits to this fund, which is going to be a fund of funds, okay? But I believe there's also a role for policy advocacy that we will play as a private sector foundation to ensure that the private sector companies or the large corporates that decide that they are going to channel some of their profits towards this vehicle receive a tax rebate of sorts. So that's our role. The good news is that we'll be meeting with the president, I think, on the 23rd of this month. We are happy to go with a position paper on this matter because it's a serious matter. And actually, it's you who raised it to the president the other day. So we'll take it to the next stage. Honorable Minister is here. I'm sure we'll get her support on that matter. So it's a policy paper.
Please, a round of applause for
yeah,
that,
it's a policy paper. Any of our top 100 corporates and taxpayers, they can get a bit of breathing space to contribute some of their profits to this fund. We will work in partnership with other funds, because it's a fund of funds, to channel that money through them so that this money goes to SMEs that have been tried and tested a little bit by Stanbic or by NSSF or by UDB. We'll have different ticket sizes from $10,000 right up to $3 million for the big boys and girls, as it were. So yes, the corporates have a big role to play, and we'll open up that space as PSFU to bring them in. Corporates also have a very big role to play in ensuring that, I think Uganda has reached a point where partnerships we can now start talking business to business partnerships. Some of the big corporates out there are hustling with stuff that some of our innovators are already doing here. So they should be moving around and signing B2B partnerships with these innovators.
Absolutely.
So that they begin to let go of, if I may say, they should not be sweating the small stuff. If the innovators here can do that, they should now begin to let it go. And they may be focused on bigger ticket items. Maybe just one last thing for you to know. Close to 6% of Africa's population now lives and does business in East Africa. Now, that number is set to grow. And so if you are to talk about us showing our hand is going to grow in Africa, okay? And I kid you not, the next time we meet here in 2024, that number will probably have grown to 10% or more. We are growing to become one of the leading trading blocks, not only in Africa, but in the world, okay? So what does that mean? Corporates have a big role to play also in ensuring that they spread their reach beyond the hubs that they've set up in the city to some of the towns that are bordering countries around like us, like the DRC, South Sudan, Kenya, Rwanda, Burundi, and set up hubs there. And these hubs can be used either by themselves or by the innovators that are around us to start moving product to these places. That's why at PSFU, part of the effort that we will commit to this catalytic fund is to make some of these businesses export ready or even investment ready, where the ticket sizes that we're asking, that we're giving out are higher than what they can handle. Some of our partners around us can start working with them and build a pipeline for us, and we take them to another level, and vice versa. We should also be able to build pipeline for some of the partners that we have on the platform here. Thank you.
Fantastic. Please, round of applause for Apollo. There's so many announcements that's been made on this podium. If we start to put the dollars on the screen right now, I think all you VCs that you think you're coming to Uganda only to spend money, you'll find that you will leave Uganda with capital. And already, please round of applause. Already I'm seeing some hands go up in the public here, so I must take some questions, right? Just because the excitement is very, very high. But before I start to take some questions, and I'm going to need a bit of an extension of a few minutes, because the longer I stay here, the more money, you heard 1 trillion profit, you heard Apollo say, hey, maybe 1% or 2% of that is going to go into this billion-dollar fund. You're hearing corporate to innovation partnerships. You're hearing investing in companies here and make them export ready. A lot of really, really exciting stuff. But before I go to take maybe 2 questions from the floor, I want to go to Kadasko real quick to say, Kadasko, can you tell us a little bit about, you talk about the Thabo Mbeki Foundation, the incredible leadership in South Africa. We talked about the PIC, right, structure, and then your role as the DG of the Bureau of Public Enterprises, meaning all the state-owned entities. And I believe the secret to PIC's money is the ability to leverage this state-owned asset to be able to to generate the cash flow, right? That allows our guys here to put more capital in. Can you maybe share a little bit about how South Africa did it?
Thank you very much, Bunmi. What I'll say, South Africa is still doing it, and there's a lot of work that needs to be done in South Africa in this regard, in terms of risk-proofing the future. That's what I'm going to call it. Because ultimately, investing in your own country, obviously leveraging those pension funds and other assets that are in the country, is to ensure that you have a future. The pensioners, their children, their grandchildren have a future. They have a country that is functional. What is a better risk-proofing than to ensure that you have a prosperous country? So it's in the interest of all of us to ensure that we mobilize the assets, the funds that are available in the country, to ensure that money goes into infrastructure development, money goes into obviously enabling some of the entities that we have seen around here, some of these startups. Because through that, we ensure that obviously the work of government here as a policymaker and also as a provider of basic services is realized. And earlier on, there was a comment made, Bunmi, and I think it was by yourself, about building confidence in the local economy. By mobilizing local capital, foreign investors obviously feel a lot more confident to come into the country itself. I've been in an unfortunate position of having, to support our state-owned companies to raise capital with the likes of obviously the PICs and so on. Obviously for some of the investments that they have to make in fixed infrastructure, it is not a comfortable space to be in. But, when the local entity, like the PIC or the DPSA, shows confidence in those kind of projects, the external ones like the PIMCOs and so on are a lot more confident coming in. And of course, ultimately what we want greater activity, economic activity in the country. And those type of investments that are undertaken by state-owned enterprises, obviously to enable the economy, enable that, and able to, obviously, to attract the kind of investors that we have around here to come in, the kind of, obviously, small businesses that are doing the kind of innovative things that we have seen here. Some of the points that if you may allow me, Bunmi, that I would like to make is that government is also a shareholder in public enterprises. The comment was made earlier to say, why can't some of the profits from private entities go towards the kind of funds that have been spoken about here, which are obviously intended to ensure investment in these startup entities. I'm saying state-owned companies are much better positioned to do so. And government as a shareholder has the responsibility through whatever compacts they have with these entities to direct that some of the profits that these entities are making, that they be directed into these kind of funds. And of course, that will be through encouraging or rather lowering profit expectations so that these entities can put money into enterprise development and supply development. And you need to have a private sector manager or public sector managers with a conscience. They need to be incentivized accordingly to ensure that they leverage the asset base that they have through obviously their management of these state-owned companies to ensure that those are leveraged to attract funding and that the funding get invested in obviously in the improvement of those assets. The point that I will make is, for instance, with rail companies, they have servitudes on which these rail lines obviously are built. And neighboring in those servitudes, you have an opportunity to build all kinds of commercial and residential accommodation, and through that you don't only enhance obviously the value of that asset, the servitude, but what you also do is you obviously attract economic activity closer to those particular corridors. So those are some of the things that government can do to leverage the assets that is under its control. And as just repeating the last point I made in the beginning, when we do this, we are risk-proof in the future. There used to be something called a license to operate. As business, we are in business because society has allowed us to be in business. The least that we can do is invest in the future of all of us. Thank you.
Awesome. Thank you so much. Please give him a round of applause. And I think this ties to one of the recommendations from yesterday, where we talked about a lot of what we've been talking about, the recommendations yesterday. Really, some other countries have done it already. So this idea of being able to partner, take a learning tour, right? Imagine the head of the state-owned entities taking a learning tour, you know, under the guidance of Gadazo to say, hey, what can we learn from how you did it in South Africa? How do we implement it here? And we catalyze the local economy. So very, very exciting. And I also like what Apollo said earlier in terms of, you know, really how do we bring all these, you know, corporates together by using a white paper, right? And I really think, and I'm going to pose this a question to the global investment community here. Are you willing to form an association, say for example, association of foreign venture capitalists coming into Uganda, for example, and contribute to this white paper, right? Because ultimately, that allows them to take some of this money, you know, from Joel, from Standard Bank, right, to create this fund of funds. So I think it's really, really exciting. So please, can I get the mic into the hall? Let me take 2 or 3 questions if I have 5 more minutes. Please, okay, the first question. Please introduce yourself, your organization, and ask your question.
Hi, my name is Philip with Catapult Africa. We're a venture capital firm based in Kigali. My 2 questions go to Joel from PSF and the gentleman from Stanbic. Joel, very exciting to hear about the 1 billion that you're looking to. You can see to your left, the gentleman was excited that Stanbic finally crossed 1 trillion. It's difficult right now when you look at Stanbic. They have a loan book of about 1 billion, and it's taken them a while. Could we get a commitment from you to, by end of year, start with 10 million and then grow that one? Because little steps make progress. And to you, sir, you mentioned that you don't go down early because your shareholders are expecting results. Everyone kills those who kill the goose that lays the golden egg realize that soon the rainy day comes. And I think you made a point where you said banks have innovated. I would like to say I see banks have digitized rather than innovated. And I think there's a space for you and your board to plan for that rainy day. One of the companies we saw in South Africa that did this very well was Naspers. Naspers was a media company. They made an investment in Tencent of 30 million. That 30 million became billions, and the rest is history. And I think there's a role that corporates have, such as yourself and your members, Mr. Joel, to be able to give access, not necessarily to buy the technologies for self, but to give access to work with the startups and invest in those startups for scale. Look at AI coming. What is Stanbic doing? Not just for Stanbic, but for the banking industry in Africa. What are the PSF members doing in the ag space or climate or in whatever technology, not just for here, but for others, for the pension funds? What are we doing? Because if we solve a problem for NSSF, we solve a problem for every other pension in this market.
Thank you.
Thank you very much.
Thank you very much. Lots of questions there. So let me just take the 3 questions, and then in the wrap-up statement, we will have everybody just answer their piece of the question and wrap up. So I think I need the mic over there. Who's helping with the mic? Over there. Please stand up. Can you stand up? Yes. Okay.
Hello, everybody. My name is Sacha Jeremiah. I'm a student by profession at Eagles in a senior secondary school. First and foremost, I want to recognize the presence of Honorable Minister and the stakeholders in this great congregation. I have 3 questions to put across. One, firstly, it goes to UDB. Why do you give out loans on a low percentage to Ugandan borrowers and then you expect high percentage return to the bank through income generation? Another one goes to NSSF. The employees who retire from their careers and who retire from their careers in private sector, why do you take long to give them their retirement benefits in time? Another one is a tragedy for Uganda private sector organization. Why do you always ask support from government, yet people with privilege honors can sustain themselves in different ways? Thank you very much.
All right, thank you very much. I like the fact that we have a student asking some really, really tough questions. I would not want to be one of these panelists today. Can we take a 3rd question real quick? Is there, I saw a hand. Okay, yes.
Good afternoon. I'm Charmaine Hayden from Good Soil Venture Capital here. So as a fund manager, we come to lots of these conferences and there's a lot of people doing a lot of talking, right? It's good to see that there's been some deals done today and that also there's been some collaborations in process. What is really, really interesting to me in looking at whether or not Uganda is a good place to invest is finding out whether or not when you're off stage, you're collaborating in the same way. So yeah, if that lends to my question. Are you guys collaborating off stage? Are you participating off stage? And are you reaching out to individuals like myself and my colleagues here off stage?
Okay, fantastic. Let me just take one last one from another foreign VC firm around your willingness or not to create this association and join in the white paper. Can I get the mic? Pass around. Who wants to go? All right, let's give it to Toby. Here. Yes.
Hello. Hi, Toby Oke, V8 Capital. Bumi's putting me on the spot, but I think I'll go for a question anyway. Question to Steve and I think is it Joel? And Joel, is it Joel?
Apollo.
Apollo, yes. What is your timeline for catalyzing investments? Because, you know, the way foreign investors work is they come, they assess, and they see, you know, should I spend more time here? What are the next steps? So what are the next steps you feel for foreign investors to come in? And this is going to the question about the white paper. Do you want to see a white paper? Or are you ready to actually work hand in hand with people? Do you have areas you want to focus on? And do you have objectives that we can partner with you to achieve?
Thank you very much. All right, that's a lot of questions. So in the interest of time, I would like every one of my panelists to kind of do a short, if possible, 2-minute wrap up sort of concluding statement, and then wrap in that concluding statement any answer or any question that you want to answer. So maybe I start with Joe.
I knew you were going to do that. So one, a correction, our loan book is 4 billion. It's being recorded. The gentleman from Kigali, that was a very strong question, and I take your challenge. Let me just reiterate why I exist, why FlyHub exists. It's for that very reason. The cost of technology is way too high for a lot of the fintechs that we find trying to do operations here. So we've already purchased that technology. What we're doing is opening it up for them to utilize so that you pay just for what you use. Secondly, it's also opening up our clientele. So when I say we're opening it up as Stanbic, it's not Stanbic Uganda, it's Stanbic Group across the continent. Meaning that if you're in Nigeria and you want to do a direct debit transaction for someone who's doing a subscription for a service for you in Uganda, you don't have to come and set it up here. The challenge that we're seeing though is the technical capabilities are still a little bit far away. You know, you talked about AI. To me, the issue with things like AI is not so much the technology, it's befuddling because when you deal with a large language model, it seems magical. But the bulk of that work is actually being done by Kenyans who are going through a lot of the gruesome images, who are going through a lot of the information. So when we look at the value chain of where those technologies come from, that's why I talked about the IP. What we're trying to do is figure out how we can get good enough agreements at an enterprise level that smaller entities can utilize. We're not under the delusion that we are going to build all the technology that Stanbic needs to service the mining sector, energy sector, all of those places. Those can be built by Ugandans. Why I talked about the procurement laws is if I have a procurement that requires me to work with an organization that has done it in 5 different countries, by definition I'm excluding Ugandan companies. But if I can pair them with another established enterprise, they get that kind of build-up. They get the experience to work with us. So it's a very long-haul initiative. Apollo talked about the catalytic fund, but he didn't talk about the fund manager. We manage it for you. To your question about whether we're doing it offline, we really are. I think the problem has always been duplication of efforts. Now we're starting to collaborate because why am I setting up an incubator space when there are already incubator funds that are going on? So our incubator, for instance, is transitioning into becoming a foundation because what we realize is everyone is trying to solve the same problem but is doing it as an individual organization. Things like this are giving me, insight into, someone's already interested in doing that. All I need to do is make it public so that you can come and work with what we're doing. So it's been a learning process, but I can guarantee you, at least for me, I'm working with these gentlemen. Some of them are more cantankerous than they seem, but it's working.
All right, thank you, Joe. Please give him a round of applause. All right, I think I'm going to go to Apollo here. Wrap-up statement.
Thank you. I actually thought Joel was going to take all the tough questions. Okay, so Philip, thank you for your question. I'm going to respond to you. I'm going to sound a bit rude, but it will help you. It's going to help all of us who are here as Ugandans, because we need to wake up and understand what is happening around us. A decade ago, a meeting like this was not taking place here. And now what does that tell you? It tells you that things around us are changing so fast, and we need to catch up. A decade ago, I don't think, Honorable Minister, we had you and the Ministry of Science, Technology and Innovation a decade ago, did we? Things around us are happening so fast that if we do not wake up and smell our good Ugandan coffee, we will lose opportunities. So that $10 million you talked about, it exists in our space right now. Even at the Private Sector Foundation Uganda, if you go to our website, you will find information on financing available to that tune. But here's what I want you to realize. Why we have stepped up our ambition and we're talking about $1 billion is because if I'm to talk about the oil and gas sector alone, and Joel here will tell you, the oil and gas sector, the ambition within Uganda, the investment required is close to $15 billion, and that's just an estimate. So whatever we're dreaming about is a drop in the ocean. We are surrounded by so many innovators. They need to move now. So we are not shy about what we are saying, and we are ready to move today. My request to you is rise up with us, we move together, because our time has come. And if we do not recognize that, guys like Toby here are going to come and take away all our opportunities. We have just launched, no, you, yes, you. I'll take you on because you tried to take me on. We have just launched a flight, a direct flight. We've just launched a direct flight to Lagos with Uganda Airlines. What is that telling you? We need to be prepared. Otherwise, these Lagosians are going to come and take away all our opportunities with our eyes wide open. And so, Philip, my brother, I hear you loud and clear. I hear what Charmaine, I think it's Charmaine, who shared about partnerships. We are working in partnership. I have a very good idea of what Joe has in his pipeline. I have a very good idea what Stephen has in his pipeline. Just yesterday, we were at a meeting with Festo, where we're looking at the pipeline that the High Innovator has under NSSF. We have a very good idea of the innovations that are being showcased here by the ministry. It is our job to take them up for scale. So we are talking, and we'll continue to talk, and I hear you loud and clear.
Awesome.
I think the other question was from Chisache. We'll go bilateral with Chisache. I picked up his point, yeah.
Okay, thank you. I know we're out of time, so I'm gonna just like cut it down to like 1 minute each now. Very, very exciting things to still talk about, but Gadazo, let's have you.
Thank you, Bumi. My last remarks, I didn't hear any questions coming my way, by the way, is that I'm already looking forward to the next edition of this session. And my sister, who just asked a question about collaboration off stage, I think what you'd want to hear from some of the colleagues here is what did they do between now and next edition to further enhance some of the work that they say they are doing, and obviously, hopefully come with even bigger announcements next time. And of course, to government, I think it's playing a magnificent role. I've really been impressed. It's my first time in Uganda. This has been a wonderful event. I think government as a policymaker, as a cheerleader, as a risk manager has been great. The environment that has been created here has been wonderful. Obviously from the speeches that one heard from the ministers and the president yesterday, you are clearly walking the talk, and that is great. And of course, let's leverage the private sector. I've just joined the private sector from the public sector. There's certain disciplines that we can learn as public sector managers from the private sector. Let's leverage those, obviously, in ensuring that we're building a better country for all of us. That's where I'll stop. Thank you, Bumi.
Awesome. Thank you, Gadazo. Thank you for that. Please, a round of applause for him. And then we go to Stevens, NSSF.
Thank you very much, Bumi. Like I said, like much as NSSF has the responsibility of making sure that we keep the savers' money safe, but also responsible to being a good corporate citizen who plays a role in the development in our motherland. We have to show that nationalistic tendency. So, so we have a whole department in charge of innovation in NSSF. And part of the work we are doing, I've already told you, we have a whole department in charge of investments so that they rhyme with where the government wants the economy to go. So that is something NSSF is very, very strong about, and that is not questionable because we have to be a responsible corporate citizen. Now, to my young brother who's talking about delays in NSSF, and I'm just going to take the Apollo line. I think you have to learn to love your country a little bit more and just not spew out what you are not factual about. As I speak now, we are paying out 75 billion shillings every month in benefits.
Round of applause, please.
75 billion to people who come to claim their funds. So it's kind of very frustrating sometimes someone to stand up and say you are not paying. And you wonder where the 75 billion shillings is going. And in this period, actually the average is 80 right now as I'm speaking. Now, have we recognized where we are, and are we willing to scale and collaborate? Definitely. Like I said, yes, now we have been dealing with seed funding, but realize that after we have helped these companies to stabilize, to prepare them for the next stage, then we need to partner with the other players in the whatever. I already talked about how we are partnering with quite a number of individuals, companies, corporations in the region, in Uganda, in the region. We are in talks with quite a number of big corporates. We are in talks with Stanbic. We are in talks with some of the communication companies. We are in talks with the UAP. And we are going to scale and make sure that probably in the next phase, we should be able to give out up to $200,000 equivalent to the companies that have scaled. And lastly, do we want to talk? Definitely want to talk. Everybody, every organization which has an idea which is going to help catalyze the Ugandan economy, it's worth talking to. So thank you very much.
Amazing. Thank you, Stephen. Please a round of applause. And then we have last but not least, James, UDB.
Thank you. I think I had two questions come my way, but one has been partly addressed by Stephen, so I will save that in the interest of time. There was a question on why we are not doing enough for the local enterprises. I just wanted to clarify that in terms of our geographical footprint, our investments are strictly in Uganda. So we don't have investments outside the country. So essentially all the portfolio that we have is really within Uganda. Now my parting thought is this. One of the things that you can see, the theme that is emerging from the discussion here is that on one side we have all these innovators. If you take time and you move around, all these people who are exhibiting, they want to scale up, they're trying to look for funding. And then in the room, we have all these VCs and PEs, and they are saying there are no businesses. But just step outside the tent, and then there are all these businesses that are there. So that means we have a gap. We have a gap in the context that we do not have businesses that are investment ready. And the question here is, what are we doing to close this gap? What is government doing to close this gap? What is Stanbic doing? What is PSFU doing? What is NSSF doing? What is UTB doing? Obviously, we are doing quite a lot to try and close this gap. And the focus should really be on how do we get these enterprises, how do we get these innovators to be investment ready so that they're in position to attract the funding from the VCs, the PCs, and all the people that are in the room. Thank you.
Thank you. Please a round of applause for him. So we would like to close the curtains here. I'd like to ask everybody to give them a round of applause and a standing ovation too. Thank you very much. Thank you. All right, we're done. Thank you.
Another round of applause for panelists as they take their photograph. Thank you very much. Apollo, please come in and take the photograph very quickly as part of the panel. Someone said something about deals being done and commitments being made and checks being signed. In front of me, I have a piece of paper that is detailing funding options for 7 projects. Actually, 8 projects. 1, 2, 3, 4, 5, 6. 8 projects, totaling to $1.67 million. This is by the government of Uganda, and these investments are going to be made in partnership with Uganda Development Bank. I'll let the panel finish. I think more money is moving on the stage now. I will ask the panelists to kindly leave the stage now.
Transformation kugazi ya bongo ya assurance kugwa musada impotency emikwano gigambe banabe tugende borwawo musanga Uganda tusimbude science technology and innovation.
Great, thank you very much. So it's almost lunchtime. We'll take a break in about 30 minutes. Before that, we have two very quick activities we'd like to go through. Like I was saying, ladies and gentlemen, if we can all take our seats, please. Please take our seats. I'd appreciate that. Joel and NSSF, please. Please take your seats. Toby, this is, I know you the $5 billion, but first wait. Yes, I was mentioning that we were speaking about deals today and deals and contracts being signed. In front of me, I have a piece of paper listing Government of Uganda commitment to invest in 8 companies. And this is going to be deployed and managed by the Uganda Development Bank, totaling 6.19 billion Uganda shillings, which is $1.67 million. And these companies are really cross-sector from export promotion, productivity acceleration, the pathogen economy, and many others. One of the very interesting companies receiving an investment is Pombegard, which I hope many of you get to try out today. I would like to now invite the Honorable Minister of Science and Technology and the CEO of Uganda Development Bank to come to the deal table to execute this contract. Round of applause, please. This is a $1.6 million commitment by the government that's going to be signed. I'd also like to ask the Undersecretary of the Ministry to come to the front to witness the signing of this document. Mr. Peter Orion, please, at the front. So just by doing that, we have investment made in 8 Ugandan companies. Some of them you probably have seen. DJ, can we have the science song? I think it's perfect.
Science, technology and innovation. Science, technology and innovation. Have you heard about science, technology and innovation? Gasiria formula balance equation. Gabiri kumula mwakwa kuchuza si. Mumu pimpi transformation. Kugazia bongo ya assurance. Kukwa musada impotency. Emikwano jigambe banabe tugende borwawo musanga Uganda tusimbude. Science, technology and innovation. Science, technology and innovation. Have you heard about science, technology and innovation? Gasiria formula balance equation. Gabiri kumula mwakwa kuchuza si. Mumu pimpi transformation. Kugazia bongo ya assurance. Kukwa musada impotency. Emikwano jigambe banabe tugende borwawo musanga Uganda tusimbude. Science, technology and innovation. Science, technology and innovation. Have you heard about science, technology and innovation? Gasiria formula balance equation. Gabiri kumula mwakwa kuchuza si. Mumu pimpi transformation. Kugazia bongo ya assurance. Kukwa musada impotency.
If the companies receiving investment are in the room, please come up and take a picture. No, so we will continue and complete the signing process. For the investors in the room, the lady in the middle signing the contract is the CEO of the Uganda Development Bank, in case you would like to engage just after this.
Science, technology and innovation. Science, technology and innovation. Have you heard about science, technology and innovation? Gasiria formula balance equation. Gabiri kumula mwakwa kuchuza si. Mumu pimpi transformation. Kugazia bongo ya assurance. Kukwa musada impotency. emikwano gigambe banabe tugende bolwawo musanga Uganda tusimbudde tusimbudde.
As you can see on the right, the individuals joining the signing process are the beneficiaries of this funding. And these companies include biodegradable banana fiber hair extensions, high quality shoe brushes from cow tail hair. So this is upcycling, cassava processing plant, Pombegard, cassava value addition, and the National Network of STI Excellence. So this is a skills development program also being run and receiving funding to be able to execute this. Can I also ask the panelists for the media panel to come close? So we'll do this just before lunchtime. Can the panelists for the media session please come close to the stage now?
Science, technology and innovation. Science, technology and innovation. Have you heard about science, technology and innovation? Formula balance equation.
Thank you very much. We see money moving. It's always an exciting thing to see money moving, especially at an investor event. I'd like to ask you to all please take your seats. We have a short 30-second session before we break for lunch. I'd like kindly request you all to take your seats.
Science, technology and innovation. Science, technology.
This is $1.6 million exchanging hands. It's as simple as that. Walk around, find a venture you like, and sign a check and shake hands and make sure it works. Round of applause, please. This is 8 companies receiving investment, and the best part about this is it will be managed by an experienced fund manager, the Uganda Development Bank.
Science, technology and innovation. Science, technology and innovation. Have you heard about science?
Another round of applause for the investment made into these ventures. I would like to ask everyone to please take their seat. The next session is very short, but also very impactful and very meaningful. When we were curating this event, I'd like to ask Mr. Cephas kindly, thank you. As we were putting this event together, it was important that yes, we can speak about investment, we can speak about what government is doing, but there are enabling factors that help you actually succeed as ventures or as startups. And one of those very important ones is media. Just to share my own story, about a year ago, we raised venture capital, and Tekabal, we tried to hide the story, but Tekabal somehow found out about it and wrote the story in the media. And I woke up in the morning and saw my face on Google, and I thought to myself, okay, this is it, I'm finished. But the reason why that happened was purely because a good, strong media, a trusted media source wrote about a Ugandan venture. And my point to this is we must be able to tell our story as Uganda. We must be able to exchange with the continent and tell people that what we're building is quality. To moderate this panel is an ecosystem builder and one of the people who helped create this Science Week event or this Investor Summit, Mr. Sako Sidi from Flery and Pitchroom Africa. And he will be moderating a panel with Mr. Arthur Chapeau. Did I get it right? From the Baobab Network. And Mr. Moyua from Tekabal. We were supposed to have someone else from TechPoint Africa. Unfortunately, we had some flight issues, but this is a more than competent panel to discuss this session. Thank you. Please watch the gap. Mind the gap.
Hi everyone. Hi everyone. I know. I want to apologize. I know we've been here for a while, but I promise this panel is going to be very short. So let me start with what I heard in the first panel. So when we talk about ecosystem, said ecosystem is the participation of multiple players, every one of them playing their part to improve economic activity in the country through tech and businesses or whatever the case. Today we're going to focus and have a conversation on one of the key players in the ecosystem, and that's the media. But before we go on, I'm just going to allow my panelists to introduce themselves. We'll start with Moiwa from Tekabal.
Hi and good afternoon, everybody. My name is Olumuyiwa Oloogboega. I lead the newsroom at Tekabal, a Pan-African publication that covers technology. Thank you, and I'm glad to be here.
So for those of you who are here and you are founders and you want the world to hear about your story, Tekabal is the people you go to. Next is Art from Baobab Network. Art?
Hi everyone, my name is Art. I'm one of the managing partners at Baobab Network. We are an accelerator and early stage VC focusing on backing African tech startups. We write checks of about $100,000. And we have a 12-week accelerator, and essentially our job is to make sure we provide a pipeline for all of the investors in the room. Yeah.
Thank you so much, Art. So, Moira, I'm going to start. Before you came to Uganda, what was your perception about the startup ecosystem in Uganda?
I feel like it's a huge coincidence that in the same week we came to Uganda. I think we're editing a story about Imata, which is a Ugandan agrofinancing startup. But before then, not a lot of exposure to the Ugandan tech ecosystem. But our coverage is expanding. So yeah, it feels like a good time as any to understand what's happening here.
What are some of the reasons why you think a lot of coverage have not been done so far?
I would say that first, we don't get a lot from maybe the existing media publications here, right? I think it's been said on the first panel and the second panel as well. Usually when local media is active and when local media is actively pushing those stories, someone outside pays attention and says, okay, it seems like a lot's happening here and let's cover that. So that's usually what happens in the regions we cover. But it takes a bunch of things to make people pay attention. This, for example, is making people pay attention. People host really good conferences, for instance. You meet people and you suddenly realize, oh, okay, this was a blind spot. And now that it's no longer a blind spot, we should pay a lot more attention. So I think that's useful.
So Art, I'm just going to piggyback from what Moira said. He said the good branding allows people from the outside to pay attention. As an investor, you are outside, you're looking at the country for the very first time. How do you source your information?
I mean, we read news.
Exactly.
So we check Tekabal. I think for us, we only back African founders, so we're trying to really understand the local context, right? Because I think if you want to win, it's about... it's not working. So I think for us, it's all about understanding the local context. We do that, we read the news, the local news, but we also talk to founders every day, right? So before we made our first investment in Uganda earlier this year, we have learned a lot about Uganda. I'm based in Nairobi, so we have enough information. There's a lot of Ugandan in Kenya, but I think really, sorry, so yeah. I don't think, okay. Yeah. It's okay, you can skip it.
Sorry about, can we please help fix Art mic, please? So Moira, while they do that for Art, So let's go. I like to make things practical, right? So we are all here in Uganda. For some of us, this is the first time, and we're all really excited. We've seen what is happening, and we're going to take this story out. But let's draw from one of the big fours. And one of the reasons why they are a big four is because media actually plays a role in elevating their profile. Tell us the story of Kenya, and what are because Kenya is next door, and what are some of the best practice Uganda now starting off will actually be able to put together to be more out there.
This is interesting again because we're now increasing coverage of Kenya because we're hiring another senior reporter in Kenya. This year we had a senior reporter for Kenya. Before that, we also did some East African coverage. And what we see first is that there's a lot of activity. Startups reach out to you. They pitch their stories. They say, hey, we're doing this interesting thing, or we're solving this interesting problem, right? And something that gets said a lot is, we sent something to you guys. We pitched this to you guys. And we receive that a lot. And that's good, right? Because what it means is that someone within the newsroom will take a look and may resonate with a problem that a startup is trying to solve. And what then happens is that person writes on this startup maybe somebody has never heard before. Why? Because they're doing something that matters to him or something that resonates with him. Now, say that startup receives funding, finds traction, grows, right? That writer or that reporter has formed an emotional connection with that startup, believe it or not, right? And feels in some way responsible for wherever they've got into. And the odds are that that coverage will keep happening, right? You see a lot of talk about how fintechs are getting, for instance, how fintechs are getting funded in Nigeria, in Kenya. Some of that too is just narrative. It's just a good narrative, for instance, and goes to show, for instance, that these are some of the sectors where people are finding interesting problems and where VCs are seeing strong returns as well. So yeah, it just goes to show that across the big four, in quote, like you said, some of the narratives are just interesting. In fact, as far as I'm concerned, the big four is a narrative, right? If you watch football, we would remember that there was the big four a couple of years ago. It first expanded to the big six and the big seven. These days there's no big seven because everything is in flux. The once small players are now, jostling for big positions, are now playing on bigger stages. So that's kind of how the media can work as well, right? It's that first this narrative gets shaped as the big four, but as more exposure happens, we drop terms like the big four because the coverage becomes more robust.
So, he made a very important point, right? The reason why there's a big four is because the media build a narrative around these ecosystems today. How big of an influence does the media have when you're looking at making an investment decision or defining your investment thesis in general?
I mean, we're trying to not follow the gram, right? So the media is important, obviously, but I think a proper due diligence is important, and typically it's not just what the story says, it's also what our internal team says. But I would say media are important because you just grab any information, right? Especially the offline kind of thing. I mean, offline, I guess it's online, things like Twitter, to really understand what's the market. But the best thing for us, I have to be honest, is yes, the media is there, but it really is to travel to the country and understand that, mobile money in Kenya is a thing, but if you go to Cameroon, where I'm from, that it's not that much of a thing, right? And that is something, at the moment, no media really is focusing on these kind of details, right? So a lot of the stories will be there. Sometimes, XYZ founder raised a lot of money, etc. And so there's a bit of context beyond. That's great. But I think Techabal is doing it, to be fair, but we need more of the sort of the insight aspect of it, right? Because for me as an investor, I need to have the additional insight into a specific market to make sure that I am as sure about the investment. Anyway, we're never sure about an investment.
I mean, what about the attraction? The attraction itself. So what are some of the stories that you read online that actually attracts you to the market, right? Because you have to have a point of attraction before you are able to make an investment decision or the decision to start looking into that market. So what are some of the attraction that you look for in terms of like the quality of story? What type of story you look out for to be attracted to the market?
Yeah, so I think it goes two ways. For instance, for Baobab Network, we have a lot of inbound. And so once we see, say, I don't know, a lot of betting company, we won't do betting, but let me just use it as an example, in a particular country, we just want to understand what's going on, and then if by chance there is a story around that, then that helps us, right? So again, I think you could argue that the media will be a starting point for curiosity, but then really for us, it's all about due diligence, right? Because when we write 100K tickets and some of the people in the audience, they write much bigger checks, you can't just rely on the story. You have to rely on your own story that you've built.
Yeah. No, Moiwa, I'm going to come to you. So storytelling is important. But I was having a conversation with someone the other day. He said, whether you tell your story or not, your story is going to be told. It's depending on who is going to tell your story. And they are going to tell their story based on the perspective that they have. So how important is it for the Ugandan media to actually curate and tell the story, but also for the startup themselves to be able to build structured story and inspiring story, so people like you will be interested to take it international?
I'll use a recent example that I think that, and I would not mention names, because it was, I wouldn't say it was contentious, right? So TechAbout recently published an article about a streaming company, right? And basically we looked at some of the difficulties of building a streaming business in Africa, right? We did that story. We did a lot of research. We talked to the founders. We talked to some of the people within the business, and we wrote our story. And I think our conclusion was, okay, this is a company that's struggling in what is generally a difficult space, right? But something very interesting also happened. The founder also wrote a rejoinder, right? And not only wrote a rejoinder, but also went ahead to also frame his narrative to say, yeah, this business is struggling. This is what it's struggling with. This is exactly what I've struggled with. But this is how I feel about this business. I'm passionate about this thing. I've put years of my life into this thing, right? And I'm going to succeed at it one way or the other. So that's one way to think about these narratives. Sometimes people can be reluctant to speak on things that are not always outrightly flattering, but they forget that there's always an opportunity to shape your narrative, to push your agenda, no matter what the story is. You are the one, I think that one of the almost near use is that the founder is the person in the arena, right? No matter how much the journalist talks to people, no matter how much research the journalist does, it's still a bit different from the person who's living, breathing this thing every single day of their lives, right? And it's nothing like that when people hear from you. Even when you admit that there are challenges, it can still turn around and be some motivational missive of sorts. So that's, to a large extent, that's true. So I don't think it makes any sense to wait around and wait for people to tell your stories. If you have a great story, push it out. If you have something you think is important, talk about your milestones. We're a media publication. We hit a very important milestone in October. We hit 1 million users in the month of, unique readers in the month of October. And just like any other company, we went out and we talked about it. I think we talked about it before I came here. Like any other company, we talked about it. We sent out press releases. We engaged people. We told our own story, right? So I think that's important. If it's good, if it's bad, get out there, get in front of it, talk about it, and share your own story. And yeah, that's
I mean, one of the things that have actually led to the growth of our company at Fleury, so what we do is we've been able to just aggregate healthcare providers and offer them to the migrants to be able to take care of their family back home. And one of the things that we have actually leveraged very well is just looking at how we connect with those migrants on LinkedIn, social media, and things like that. Because when we talk about media, most times people just think it's news, it's TV, it's print, but there is social media, right? So Art, this brings me to the question of when you're looking at a startup, right? What inspires you particularly about the startup journey and how they handle the narrative that they are telling about that journey on social media specifically?
Yeah, sure. So, I mean, those days, anything you say, you do is online, right? So you have to be very careful. So again, back to the due diligence, what we have a lot of the process, but one of the steps in that process is to actually do a thorough research of the founding team, and some key executive across social media, LinkedIn, etc. You know, and when we want to find stuff like what they've said, affiliated to political party, I mean, anything that could be a no-no for us. So I will say that's definitely important. I think back to the point earlier on media, right? One thing we've seen is sometimes some of our startups in Nigeria, for instance, they have written some articles about what they do and pushed it on Tech Cabal, and that really helps, right? So those kind of things is also a good sign, but also sometimes it could be like they're trying to tell a story, but there's no story, right? So sometimes, you know, we just have to be careful, but I would say social media, it's so key, right? Like everybody, I mean, you have to be careful what you put online as a founder, you know.
Yeah, because it's actually very crucial, right? And I've seen many founders make that mistake on in the sense of being controversial. They go overboard and then run into problems with their investors. So I'm going to try to wrap up the conversation just because I know a lot of people have been sitting here for a very long time. But I want to ask you, Muyiwa, how specifically do you see government support coming in and being able to influence from a non-political perspective, but keeping it in such a way that the investment to push the story and tell the truth about the ecosystem, how important is that in building a vibrant and scalable ecosystem?
I think it was Toby Oke that said on a panel here about how policy is such a crucial part, and how in all of the big four ecosystems, the government has taken specific interest in allowing things to happen. In Nigeria, for instance, if you go back a few years, you see that the suspension of right-of-way fees was very critical. I think I wouldn't mention names, but it was very critical to helping a cluster get off the ground, right? So again, you cannot do without government support to a large extent, right? The government has its own place, it has its own policy, has its own way of saying, we're going to encourage this. And we're not just going to encourage it, we're going to encourage it by pushing policy. We're going to legislate and put in things like the Startup Act, right? We're going to talk to state governments or other federating units and say, look, if we keep the right-of-way fees where they are, we're not going to be able to lay cables at the speed we want to, right? We're not going to be able to beef up critical infrastructure, right? Again, we'll talk about some infrastructural problems, and I think, I'm not sure, Toby, myself, and someone else were having a conversation on our way here this morning about how, he was talking about how sometimes some businesses, the problem is that if you put technology on top of some existing challenges, maybe infrastructural challenges, it doesn't actually solve those problems, because no matter what happens, you still have to come down and solve those problems. So for instance, if the government prioritizes infrastructure, right, some key pieces of infrastructure, it's a different conversation. If the government is clear about policy, if the government is clear about ease of doing business, and it's not just talk, but you can actually see, and it's easy to do business. If the government is clear about maybe, for instance, foreign investors repatriating their profits, it no longer is something where you need to talk a lot, right? Because people can see that if I come in here and I put in money into something that works, there's an enabling environment to make it happen. Volatility will not happen. For instance, I think that there used to be running jokes about how you tell your investors about risk, and maybe one of the risks is government, because you could wake up and the government makes one policy and one whole sector is gone, right? So nobody wants that. If anything, just like in foreign exchange policy, the most important thing is consistency, right? People want to know that things are going to hold steady for a long period of time. They're going to be able to come in, put their money, get out when they want, and do good business.
So I think you mentioned being clear a lot, and clarity is very important, because it's communication, right? The art of communication, ensuring that the policies are communicated very clearly. There are no ambiguities in how they are communicated. But also, like what Art has been saying, the work needs to be done, right? It needs to be backed, because once you get to due diligence, and due diligence happens at every stage. It doesn't only mean in the startup environment, right? It's just about making the conscious research efforts before you take a decision. And I just want to, come back to you and just think about investment strategies in general, but learning from other markets, right? And learning from other markets that you've worked in, what are some of the key two things, primarily from other markets, that you think the Ugandan ecosystem can replicate to be able to fast track their growth?
Yeah, sure. So for context, we've done 45 investments across 15 markets in Africa, and including Uganda. I think Uganda is it's an exciting market, not just because I'm here, but because there's a population, there's all the key metrics. I think there's a government that really is trying to to set the things right, like Moe said, right? Government are one of the key pillars for any tech ecosystem, right? And so I think Uganda can is doing that and is going to thrive. Honestly, all these other things around that middle class growing and whatnot, you see it in Uganda, although of course it is not everywhere. So, but to really answer your question, I think Uganda is doing a lot of great stuff. Events like that, newsrooms like Tekabal putting the software there. And so now we're just waiting for startups solving big problem. With great market size for the solution, and that need funding, right? And there's a lot of them in Uganda. As a matter of fact, we're about to make another investment probably over the next 2 weeks in Uganda. So we're very bullish with the country. I can't really say there's nothing they're not doing.
No, thank you very much for that. Ladies and gentlemen, thank you so much for being here with us. But just last thoughts on your side, and I'm just going to pick on David a little bit. So David said that when they raised venture capital, they were about to put a story together for Tekabal to make an announcement, but then you jump in front of that and then you tell the story. How did you get to tell his story without him reaching out to you? And I'm asking this from the context of founders and startups that are in Uganda who may not be able to access you directly, but still are good enough for their stories to be told.
Well, as to how we're the story, well, we're journalists. We're expected to be deeply sourced. We're expected to have scoops. We're expected to know people. As to other startups generally, and I say this because we receive, say, on an average, maybe 40 press releases every day, right? You'll be surprised at how unconvincing some of those press releases may sound. It's always great to just put your best foot forward, sound like a human being. Like people connect with people. If you really sound like, if you send someone an email really passionate about what you're building, really clear about what you're building, I think it gives them a chance to connect, right? I don't think you always need to push for the publication first. It's good to push for, you know what, let's have a 10-minute conversation. Let me tell you this interesting thing I'm doing, let me show you. Because it just becomes a better conversation if I show you this thing I'm building, right? You get on a Zoom call, you get on a Google Meet call, you do a physical meeting with the person. The person can see this thing you're passionate about, can see what you've built. It makes for a compelling story, right? So yeah, I would say that people need to push their stories more, need to put a lot more thought into how they push their stories, need to be creative as well, and realize that I think a lot of media houses are drowning in press releases, which is a good thing. Everybody loves for that sort of thing. But to find a way for whatever you're sending also to stand out with that volume. Again, just to get creative. But always reach out in that I think for many publications, at least for Tech Cabal, our writers, our reporters are really public facing. You can find them on Twitter, you can find them on LinkedIn, you can find them with quick Google searches. You can shoot them an email, you can send them DMs, you can send them LinkedIn messages. Again, always remember, reporters are in need of stories. Reporters are always looking for stories. So it is literally, it is their job. So if you bring them a story, you're helping their lives. You're making their jobs a lot easier. It's just come in a creative way and make your story very compelling.
So what I learned from there is be bullish, be creative, but also ensure that you're doing the work and building a scalable ecosystem. We need the media support to be able to create a point of attraction for people like Art to be able to come in. Ladies and gentlemen, thank you very much. Can we have a round of applause for our panelists?
Give it up one more time for a very interesting media session. The room has really thinned out. It is lunchtime. We shall take a 1 hour break now. Well, not really an hour, about 50-minute break, 45-minute break, okay? We shall have lunch for the investors in the lounge. You should have lunch catered. For the other guests, there's a food court on the side where you can purchase some food. And we look forward to seeing you in the next few minutes. There's a number of entrepreneurs in the room. I saw the CEO of Kira Motors, the bus that you came in on, the investors. So Paul is in the room as well, so please go out and meet them. And see you at exactly 2 p.m. back in this room. We have a really, really interesting fintech panel to start. Thank you.
Science, technology and innovation. Science, technology and innovation. Have you heard about science, technology and innovation? Gasilia formula balance equation. Gabiri kumula mwakwa kuchusansi. Mumumpipi transformation.
It's an announcement to make. The Kids Park and access to every area except the investment lounge is free of charge. This is a public event, so please enjoy.
Science, technology and innovation. Science, technology and innovation. Have you heard about science, technology and innovation? Gasilia formula balance equation. Gabiri kumula mwakwa kuchusansi. Mumumpipi transformation. Kugaziya wongo ya assurance. Kukwa musada importance. Emikwano jikambe banabe tugende morwawo musanga Uganda tusimude. Science, technology and innovation. Science, technology and innovation. Have you heard about science, technology and innovation? Gasilia formula balance equation. Gabiri kumula mwakwa kuchusansi. Mumumpipi transformation. Kugaziya wongo ya assurance. Kukwa musada importance. Emikwano jikambe banabe tugende morwawo musanga Uganda tusimude.
Uganda yadosula mukatango yochakasoliwo tochawansiyo yuwe Uganda nebogende bulaya nowaso muzungu nze nempaso musoga techikuchusa yadde nyindo yolimpanvu ate yoli nyimpi temutusosola. We are brothers etoke nechinyebwa lumonde nekawo yemmere yakuno jagala nnyo Uganda ndi munna Uganda jagala nnyo Uganda ndi mwana wa kuno ndi mwana wa kuno
Drown out the noise. Listen to the sound of my voice. And just take a second to refuel. 'Cause when you stop